jawboning. All right, it looks like we're live. I'm not sure. Give me a second, one more time. I apologize. Just want to see if I can hear myself in my headphones. Audio check one. Okay, it's about 3-second delay. That's pretty good. So I have it set to the lowest latency. So when I'm showing my 15-second chart, or we won't go down to a 15-second chart today, but we'll go to 1 minute. All right, so let me explain to you why I'm even doing a mentorship here. As you know, I've been trying to get my kids to want to do this pretty much since they were born, trying to mold them and get them into the mindset of not thinking for the purposes of procuring an income from someone else's hand, relying on them to say what they can earn, when they can go to work, when they shouldn't, when they can have time off. I don't like to cultivate an employee mentality because I don't have one. So my son Caleb recently had an interest in making another attempt at doing this. I know a lot of you always ask, how are my kids doing? How are they doing in their learning and whatnot? First of all, I make them work, and it's work hardening. It will make you want to leave it if you're forced to do it. If you get money from daddy, if you get a lifestyle given to you, it kind of makes you lazy, and you become very lackadaisical, and you just don't really have any pursuit in you. So that method I've used has hopefully done its work in the venom of making him want to leave the rat race, knowing that I'm not just going to dole money out to him. His interest is again piqued and wants to make a good attempt at it. So I get a lot of questions about, if you're teaching your kids, how do you teach your kids? What is it that you do differently, if you do anything differently? And I honestly, I do things slightly differently because, they're my kids. Okay. You're not entitled to anything from me. I'm not obligated to give anything. I'm not expected, to be your best friend or to be your guiding light. As much as I seem like I am in the videos, it's because I'm talking to my kids, and that's why you have this connection with me, because you hear the sincerity in what it is I'm teaching, because I care about them receiving it from me. So it's like an archive of me teaching, instructing, encouraging my own children. So when I'm talking with a sense of sincerity and empathy, it's genuine because I have them in my mind. Now, invariably, sometimes I get a student that's outside my family tree, and they'll contact me and they'll say, hey, look, I really appreciate if you could do this, that. And I would touch on those topics rather. And, or one of my kids will say, Dad, how do you deal with a situation like this? Or what if the market does that? Or how do you know when not to do something? Or when should you really push it aggressively? I'm going to talk a little bit about that, not so much today, but I want to give like a baseline on where you should be at when you first sit down to start learning how to do this. I'll push buttons in front of you. I'll talk about where the market should go. I'll talk about what PD array isn't so important to me at the time and why, and the ones that I think are important. So that way it kind of like filters out. And because I plan on doing this Monday through Friday, it will be a exercise for you. Now, if you are already profitable, whether you're using my concepts or a derivative of them, or you're doing something entirely different, It's probably better that you don't watch the live stream. Just do what you normally do, because I'm probably going to distract you, or I'll be a perfect excuse for you. If you take a losing trade, you'll say ICT caused me to lose money, and you won't take responsibility, and you need to be responsible. Okay. Um, the things I'm going to touch on is obviously, you know, where your mind should be every day sitting down in front of the charts. You have to have some reason to be in the charts doing it. So that's the reason why I started the stream at around 8 o'clock. I know it's like 7 minutes late, but you're not my employer. So I can punch in late if I want, and I can go home early if I want. So I want to talk a little bit about that ahead of 8:30. We have a heavy news driver, the ISM PMI number at 10 o'clock. I'll be with you until probably like 10:15. Okay, but this mentorship, at least the first lecture here, is probably going to be a little annoying for some of you that just want to get out here and start pushing buttons. But I promise you, if you don't want to sit through this live, come back to it when you have time to do it, but before you watch tomorrow's live stream, okay? Because otherwise you'll miss the whole importance of what it is that you should be doing before you sit down, whether you're watching my live stream, someone else's live stream, or you're doing your own model, your own trading, okay? Because it's very, very important that you have a real reason of why you're doing it. Some of you are here and just want to see me do something and it not pan out. It's just something you can go on social media and get some clicks and likes and some interactions because you need to get your grocery bill paid. And that's fine. That's cool. But I'm not here to do those types of things. I'm not here to brag. I'm not here to boast. And yes, I'm going to win the Robbins Cups, so stop sending me emails, okay? Just stop. I got plenty of time for that. Don't worry about it. It's in the bag. Trust me on that. Okay, I told you all I would give you a drama. I'll give you a tragedy. I'll give you a tearjerker. But at the end of the year, it's my name at the top of that list. Okay, so just relax. Keep making your videos because you look stupid. Exposed ICT failed Robbins Cup. That's just going to make it even better. But anyway, our focus is going to be primarily on the NASDAQ today. But in this mentorship, I will go back to talking about Forex because I know a lot of you are stuck in.
Well,
that
JD,
asset class, okay?
the only thing I can do is
I'm not
just
interested in pushing any.
I'm just
orders through that
also
market anymore.
want to make millions also.
I will cover some of
So,
the things that are salient.
hey, you're
to
49ers
that
fan.
individual
Hey,
asset
what's up,
class
bro?
when
San
it is
Francisco.
appropriate, but it's not appropriate right now because right now I want you to think about what it is that you should be doing before you are trying to trade.
Yeah,
Before you're
it's
trying
a
to trade with your funded accounts or trying to pass combines or whatnot. Full disclosure,
But yeah,
I
JD,
talked to Caleb and I asked
KDA,
him,
you
what
know,
his
it's
intentions were, what he wants
gonna be
to
a
do,
process
what
when
he
you want to
did.
make millions, and
He wants
you know, it's
to
gonna take
share
so much time. You see
and
how long is this
document
video?
his
The video
progress,
itself
so
is
he'll
2
be
hours,
doing a YouTube
and he has
channel.
so much
So when I
videos of it.
teach,
So
I'm talking. He's not with me right now, but he's
you just have
listening and watching
to
kind of like you
take the
are.
process of learning
So
it.
the things I'm talking about in this is going to be
I watched his 2023
my
mentorship.
suggestion to you if you maybe you've
Became
watched some of
pretty
my
good
videos, maybe you watched a lot of my
on learning
videos,
how to do
and you
it.
just don't know
So
what to do or where to begin or what
I'm
to
just doing
do
it because I
right now.
wanna.
What do I do
I like I
right
like
now?
I
Because
like
it's
his
very daunting
mentorship.
seeing how many videos I have and all these different concepts and all these different
This is how you're gonna make
things,
millions.
these
Is
moving parts.
you just gotta
It's
believe it,
very
man.
intimidating, and I get it, but
You gotta believe in
it's
the
meant to be a
process.
compendium, meaning it's like it's my
You know, I
entire
finished all my
encyclopedia of
homework,
what I'm going to
so
give to the public.
tonight it's
So
just
you
gonna
can go
be
in
just
and build your
learning.
model.
I'm not
So
gonna
I'm
go
going
to
to
the
show
clubs or
my
any of this
son
stuff.
how he should do it correctly this time, where it's step by step. Dad's going to be explaining
I've
it
been
live,
trading for almost
so that
4
way there's no
years
hindsight
so
stuff.
far.
Not that it was ever hindsight when I was teaching, and he would watch me
So
push the
pretty much
button
I
right in
just
front of
live
him. He
stream
would
every
see me
morning.
explain.
If you
I
watch
would go
my
here.
YouTube
This
and
is
all
where
that
it's going
stuff,
to go next. I don't want to see it
I
do
got
this. I
4
don't want
funded
to
account.
see
I
it do
got
that.
5 total
This is real
funded accounts. That's
mentorship. Okay,
450K.
we're
So
not
that's a
going to be doing any
total of
market replay. We're going to talk
250K
about theory and then say, now let me push the market
worth
forward and
of
watch what
funding
happens
from
when
a
you have the
fraud
benefit
firm.
of already knowing what it's going to do. That
And
is absolutely not.
yeah,
That's not mentorship. That is absolutely not
it's a
teaching
process,
anybody
guys.
anything, and it
Yeah,
certainly doesn't
I trade for a
inspire
living.
trust in the person that you're learning from
I'm
because they
a
have
I'm
the
a
added
full
benefit of
time
knowing what
student.
has already happened.
A full time
So
student. You know, just
seeing
trying to get my
live
degree,
price
and then
action,
also
watching
a
the
small
data
business owner.
tick
I do
without the benefit of
videography
knowing what it's going to do
for small
is
businesses
exactly
and
what
stuff.
you as a trader are going to have to encounter every
But
single time you sit
I
down
have
the charts.
a you know
You don't
a
know
group of a
what's going to
community right
happen,
now.
and
I got
right
like
now it's a
4 people in
wonderful
my community
learning
on the
experience because
Discord.
the climate is
We are
so
all traders, full time
statically
traders.
charged.
They've been
everything
doing it
that's
for
going
so
on in the
long.
Middle East right now,
They have
they're
different
going to
kind of
have
style of trading.
reverberations throughout the entire
No, I
market
don't.
globally, and
Well,
probably
last week
in
I
your neck of the woods where
made
you
for
live.
that week I made like
So
$4,500
it
for on my
increases the
funded account.
level of responsibility on your part as someone that wants to engage in
I
investments
lost
because they're very risky.
1,200 on
And now
Wednesday. I
add to
stopped
it
trading on that
the
day on 3
increased
accounts.
level and
And
amplitude
then,
of
the throughout that week I made
uncertainty
4,500.
where anything could
45,
happen.
1,600 total. Yeah, 1,600 total.
A bomb drop or a series of bombs drop in an unexpected location, and then boom, everything starts changing rapidly. And that fear and that rush will be injected into the marketplace. And they will use, they being the people that are in charge of price action. It's not the buying and selling pressure that moves price. And you'll hear a lot about that as I go. And I know some of you don't like that. I know some of you don't believe in an algorithm. I know you believe that buyers and sellers push price, and that's fine. I'll leave you to that myth. You want to believe in fairy tales? That's your business. I'm not going to try to wake you up from your dream. Sleep tight.
No, JD.
Price
It's
will
still a
do what it's
process,
going to do
bro.
because it's coded
Just learning how
to
to
do it
trade it takes
based
a
on time.
while. I'm a
Okay,
broke kid,
and
but
time
I'm gonna keep
is
working on
essential.
it.
It's the first
I'm a broke
hallmark
kid,
to when and why a market
a
should
young
produce a
adult,
displacement, a run,
and
whether it be impulsive, whether it be retracement,
it's
whether it be anything.
I'm working my way up,
It's always going to be
learning
delivered on the
from
basis of
other
time.
people
It's
how to
going
be a
to
millionaire and
move
stuff.
at a
But for me,
specific
my
time
passion
or
is
period
actually
of
stock
time
trading. I
in
love
20
trading, and
minutes.
I love
That's
to
a
give
macro.
people resources
And we're
that
going to
they
talk
need,
about those things
especially you,
because
bro.
I want to
You
simplify
know,
it for my
if you want to
son.
make millions, you just
You
have to
all are
stick with
getting
people that
that
is a
benefit
millionaire.
of
Can't just
seeing
waste
it,
your
hearing it,
time,
and
drinking
being
your way
explained to you
to
as
drinking
if it were
alcohol.
you
Do
being
something
daily.
that's gonna make you
I'm not hiding from
comfortable.
anything. I just
So
sent him a
only
text
way
before
to
I
do it
started.
is
I said,
you just
just
keep
stop
doing it.
texting me. I'm doing it live right now. Don't talk to me in a text because you're going to distract me. Okay? So there's no secret texting going on.
There is no
There's no
secret to becoming a
conversation behind the
millionaire.
scenes.
So
Everything you
you just
see
have
and
to keep
experience while I'm
keep
doing these live
grinding.
streams is exactly what he's
I
digesting
still
the
struggle.
same way.
I still struggle with what I'm doing.
And the things that I'm going to encourage him to
That's
do,
pretty much
my
what I've
suggestion
been
is
working on
to try it
is
for yourself. And you're going to
my
see
trading
everything
style
that I taught
is
is
9:30 to
absolutely
10
not
to 11
complicated.
o'clock.
The
I only trade
complication
for an
comes from
hour
people that
and I'm
want to
done.
take my stuff. They want to
I
water it
just
down to
I
a
wake up
one,
at
two,
3
three
a.m.
ABC pattern so they can go out to
3 a.m. and
Amazon and get a
then that's
book.
pretty
There's
much it.
dozens of books about me now, and I'm quite certain all of them are wrong.
My trading style
But
is
it's a cash
ICT
grab because
Concept.
my name's big right now.
I use fair value
It
gap
won't be
imbalances,
forever.
sell
And
side
somebody else will
liquidity. That's
become
pretty much
something
it. Sell side,
interesting
buy side
and it'll
liquidity
be a
is
new
anything that
buzzword.
hunts
But right now,
the liquidity.
the problem with it,
It's
might be
either
as interesting to me,
imbalances
is either they want to do the gotcha
and
about
the
me
buy
because it
side
gives them
liquidity and
personal,
sell side liquidity.
or
Those are the
they
main things.
want
It's like
to
supply and
learn from
demand.
me, and then
Smart
say they
money
don't learn
concept.
from me, but they talk with my vernacular. They use all my terms.
I don't use
They trade
any
just like me, but they say they golf
drawings
and they
like
do
the bear
mentorships.
flag, all that stuff. I don't
So
even use that.
if you're one of
I
those
just check where
individuals, I'm
is
going to help
the
you too.
price
Not
action
because
will
I
be.
want to, but
So and
because
I
it's going to
also
be the
just
default.
read the candlestick. That's all I
It's going
use.
to
Just
be a
candlestick,
default
just plain and simple.
response to you being here because you're going to learn how to finally do it instead of pretending, instead of talking about and teaching through market replay. Okay. Um, I asked my son what his interest was. He doesn't want me to give him
There's
money
different
to
kind of
trade
style
with,
of traders. So
which
what
is
you want
good.
to
That's
do,
cool. So
if
I
you can
asked him what
hold
his
on to the
intentions were,
risk,
and he
the
said
market
we're
will
going to
come
go
back over
through
there as long as you
like
don't.
a
You don't.
prop firm again. And he
Sometimes
said
they
he's going
add
to use his
in,
top step. Now,
and it's three
full
times the
disclosure,
leverage that they're using. So it's pretty much in the market. When you're trading the stock market, it's all about risk management. It's all about risk management, no matter what. But other than that, it's up to you as a trader to figure out where the market will go. But I live stream every morning, so yeah.
if anyone from Top Step is listening, I don't know if they do or don't. I know I have students in my mentorship that are affiliated with them directly, not just users of it, but they have no connection to me. They have no
Yeah,
connection to
it's
my
all
son,
up to you,
Caleb.
man.
There's
JD.
no affiliate links. Okay, I have
As a
no
trader,
connection
it's up to
with
you
Top
as
Step. I did not ask
to
them
whether
to
you
be a
want to
partner
put
with me.
yourself in that
They didn't
situation.
ask me to be a partner with them. I'm not trying to push any of you to their company. I personally would not trade with a company like any of them. I personally wouldn't do it. I'm just stating full disclosure. While my son learns how to do this, when he feels equipped to do that again,
Yeah, being
he
greedy
will then
and not knowing where
use
to
top
go.
step to
Sometimes
do
I have friends
a
that
funded account.
made
So that way
thousands of dollars,
everything
but they
can
never
be
took a
seen
profit out
through
of it. So they
the
were up
lens
like
of that
300 to
and showing.
600,000. They never
So
took
you can
profit out
see
of it,
what
out
he's
of the
doing when he's
AMC.
making money, when
You
he's
remember
not
back in
making
the day
money, when
when
he goes
AMC
and
was
withdraws and gets
was
payouts.
going up
You'll
so
see all that
much,
stuff.
they never
Okay.
took profit out of
So
that and
it's
they
kind of like
lost it. They
a
lost it
test
all.
tube baby experiment.
So
He's
that's
completely,
why
well,
risk
he says he
management is the
is. We'll
biggest
see what
thing
happens when
you
he
can
lives
do in the
further along.
market, and take the
But he
small
says he's
bread,
comfortable with disclosing all of it.
the small
And
loaf
he
of
wants to put it on
bread
his
that
own
you can get
YouTube
out of
channel. And why does he
the
want to do that?
market.
Because I'm gonna
But
kill
if you
that
have
hook just a
millions of
little bit
dollars,
more.
or
Twist it up and your panties are on a bunch. Oh, if he's so good and he's
how
your
I
son,
control
he
it,
shouldn't need to do all these things. Well, here's what he's doing. He's working a
I'm
job,
still working on that
just like you are.
also.
You're working a job,
For
but you're
me as a
probably on other
trader,
people's YouTube channels
let
and
me
you're
pause
trolling
this right
people and you're
now.
on social media trolling because you're miserable. Because
Let me tell you about, able to control your emotion. The only thing that you can control your emotion is to do something. Rather than staring at the chart, just do something. Then go to the gym, take a walk. If you take a loss of $1,200, get out. Take a walk. And then don't trade that day. Limit yourself on how many times you're trading. 1 to 3 trades. That's my maximum. 3 trades. If I don't make any money out of that 3 trades and my maximum loss is like $1,200, I'm out. But other than that, it's all up to you as a trader to decide whether you want to keep trading, because you're the only one who's pushing the button no matter what. And I know you watch many people, make millions of dollars or making this much. Don't be like them, bro. Because we're all the same. We they've been doing it for so long, so this is why, I'm documenting my journey as a trader. I'm also live streaming every day just to show you guys what would be my emotion and how do I control it and how do I stay disciplined. Like I'm able to juggle from my small businesses to going to school. So that's what I recommend to you, man, is to if you want to work on your emotion, take a break. Take at least, go to the gym. It's going to ruin your day. Yeah, that's the thing. You have to learn, journal yourself. I journal. What did I make a mistake on that? And how could I improve it? So that's the only reason why I only trade 9:30 to 10 o'clock. 10 o'clock 11. After 11, I'm done. I don't want to trade anymore because I don't want to look at anything in the afternoon. Afternoon, if I want to play in the afternoon, that's pretty much it. But I wake up at 3 a.m. just to complete all my tasks that I needed to complete, like check my emails, all of that stuff. Get all the video going for some of the small businesses. And then after that, do my homework if I have any homework or classes, medical, all the things that you needed to take care of. But it is all up to you as a trader to be able to control your emotion when you already know you are already making the money. Don't copy somebody that's making 10 to 20,000 a day. Mm-hmm. Yeah, that is, how to even place a trade doing stocks. You know, I don't even know anything about binary, jaded binary. I'm not familiar with that, but all I do is just trade futures. Futures market is way better than forex. Forex is good. I like forex. People have been trading it for so long, but for me, futures is when I really. Hey, what's up, RC? RC itself. He's also a forex trader. And hey, RC, you're a forex trader, right? He's a Nasdaq trader. Yeah, no. So I never touch. I did touch FX. Forex. I traded the AU USD, but this pretty much is the same thing as futures. Futures is way better because I'm only focusing on the Nasdaq and S&P. So yeah, I'm just learning the mentorship, all that stuff. JD, it's all up to you as a trader. How do you able to control your emotion, stay disciplined with what you're trading, and also learning the market structure. That's why ICT Concept, he broke it down to how liquidity is run on every minute, every day. What is the range of that day gonna be, and what time you should take your range from 12 a.m. to till now. So he broke it down and made it so much understandable on how a market runs up for a liquidity, which is like, your buy stop or your sell stop. So once you clearly understand that, you can start planning on how you can manage your risk. Because if you're let's say your risk reward, right, is higher than than what you're risking, then you're not going to be a profitable trader because you're risking so much rather than keeping it at $400 instead of 1,200. You can, and the next thing you know, you lost 1,200, and then the next day you win 400. So that's not it's not because you're not consistent with your risk reward. That's why you always want to calculate your risk no matter what. So if you're willing to risk 1,200, then you better make on that day 2,200. I mean $2,400 or more than that. If I tell myself today that I'm willing to risk 1,200, I got to make twice that much because the next day, I don't know what could happen. I might have a wrong trade. The next thing you know, I lost the trade. And now I had to make that back. But at least you already know how much you're willing to risk. That's all that matters, bro. But yeah, I'm going to go learn.
You don't have any money. Dad's not giving him any money. He doesn't want dad to give him money. He wants to do it on his own steam. I respect that. That's exactly what I want him to do. I want all my kids to do that. I gave money to Cody and it didn't help him. So I learned my lesson there. So I make my kids work. If he knows there is an interest, and there's a huge interest in what my kids are learning from me directly. So if I'm willing to teach him that, and he's willing to share that, and I'm comfortable with that, because if he makes a YouTube channel while he's learning, yes, there will be ad revenue behind those videos that he puts up and shows his progress. That's not important right now in the grand scheme of things, because there isn't going to be a whole lot of viewership, I'm sure, initially. There's going to be the morbid curiosity of seeing him fail when he does fail, and they will be celebrated amongst the social media networks. Okay, that's great. That's good, because that draws a crowd. But when he has his milestones where he grows and gets a little bit more understanding and he finds his successes, and you hear him explain what he struggles with, when you hear him explain what he felt victorious over and what he made a big deal out of while he was first learning how to do it, and then he realizes it wasn't that big of a deal, it will personify the very things that I've already taught and mentioned in Twitter spaces where I would more or less counsel, encourage them. But you think I'm talking to you? I'm talking to them. And it feels like you and I, have a intimate relationship, that I care about you on a personal level because I'm speaking that way to them. So you can tap into that same
Yeah,
network
just study.
or
Study
hive
the one that I'm
mentality that I
studying
have
right now.
directed
I
towards
think you're
my own
going to be
children by going through this
just
mentorship.
study right now and then
It'll
paper
be a
trade.
Herbalife price action. It'll be
That's what I recommend. You know, download
real
TradingView,
experience that we can see what
so
it
that
is that
you
you should
can
be
also
doing and
know
try
what
my
market are
best
there.
try to
So,
steer
like
you
for
away from the
example,
things that you're probably going to want to be doing,
if you
but they're
look,
going to
if
be
you just
detrimental
go
to
to
your development.
TradingView, then you can actually
And
just, it's free
this first
to
lecture
learn,
is
and you can
number one, your mindset
try
going
to
into it, and
trade
then how
for
we
fun.
set up our charts,
Don't
what
use
we're
your
looking
capital or
for
any of that
to
stuff.
start a baseline
So
to
this is
determine
TradingView right
what
now, right
type of
here.
trader you're going to be. Because it's
If
real
you're seeing it
important
right now,
that
this is
I
TradingView.
don't push you into a mold. Caleb needs to tell me
You know,
what he
that's
wants to
just
do.
go here.
And
You
then
know,
once he
learn as
finds
much as
out
you
what that
can with
is,
it,
and I'm going to teach how to determine what that is for yourself today too.
and
Because if
it's
you don't
all
have
up
that
to you as a
direction,
trader.
if you don't have that pathway, you're going to waste a lot of time. You're going to
So
chase
this is
things. You're going to worry
if
about
you go to
things that are not
NQ,
important.
let's
It's going to
say
actually
this is
slow your
Forex right here, for
growth.
example.
It'll
This is
slow down
Forex.
your productivity, and it'll hold you back.
That's getting
And
annoying
there's
now.
nothing
And
more
then you got
challenging
futures.
than feeling
So
like you're
that
not
would be
doing
gold
enough
itself.
in trading.
NQ.
Because no matter if you're making money or not, you know what it's like. If you've
What is
made
that
any
sound?
money,
It's so annoying.
whether it be a demo account,
Okay,
dabbling
but
around
yeah.
with it, or you tried funded accounts and maybe you got lucky and you got a payout, and then now you never can do it again. What changed? Nothing changed. You just
No, I use
got lucky doing something that had no bearing on what you should be doing consistently
I
going forward.
I like Ninja
It was just an aberration,
Trader.
something,
I use
it just
TradeAway.
happened,
That's
but
that's
now
my
you
platform because I
attributed it
copy
to,
trade
well,
with
yeah,
it.
that's skill.
With Ninja Trader, I
And we're
have
going to
to
show
pay
how
for
you
the copy
develop real
trading
skill
since I'm
so that way
trading
you can
with
produce a
multiple
consistent
accounts.
baseline
That's
to
the only reason
evaluate,
why I
okay,
use TradeAway is
do
because
I
the
want
copy
to
trading
be
is
a
free.
trader
I'm
that
cheap, man.
focuses on
I'm a broke young
long-term
adult,
trend
man.
directional moves and
So
only
that's the
trading that
reason why
direction,
I
or do I look
definitely
for
like
periods where
TradeAway.
even with
TradeAway is one of
long-term
the
daily and
platforms
weekly
that I really like to use.
movements,
TradeAway.
where can I see
It's
potential
still the same
intermediate
with Ninja
term
Trader. They
or
are on the
short-term
same
retracements?
company.
Because I understand the trend may be going in one direction, but it's something I don't trust to be a part of, because maybe you've tried entering on trend models and they burn you and they retrace deeply against you, and you feel more comfortable fading those types of moves. I'm going to teach on that topic as well. So that way you'll have reversal patterns, turtle soup, real turtle soup, not Twitter wish versions of it. The idea of knowing where the market should retrace deeper, maybe even the basis of retracing to set up a long-term trend model entry to get in sync with that daily and or weekly direction. So it's real important that you have some input initially, not just take everything I'm saying, writing it down in your notes and saying, okay, I'm going to do this, and I'm going to follow it to the letter of the law, and then it's going to give me what I'm looking for. We're in that gray area initially where you have the responsibility, because if you don't do this part correctly, everything you do after this holds you up. And it's not because my stuff doesn't work. It doesn't mean that I'm not a good teacher. It doesn't mean that you can't be consistently profitable. It just means that you screwed up and didn't listen to this first lesson. You have to determine what you're going to do as a trader. And then whatever that is, you bloom there. You plant yourself in that. You don't care what Caleb does. You don't care what I do. You don't care what every one of my other students do that live stream and do it right in front of you. You don't care what anybody else is doing, even outside of my circle of influence. Whatever they're doing, whether they're being profitable or not, that's none of your business. You're going to have no bearing on their outcome or their results. You're not going to make them more money, and you're not going to prevent them from being profitable. So why waste any time trying to do that? Don't try to copycat anybody. Don't try to do that. The things that you should try to copy is the mindset about what I'm going to cover in terms of reading price. Very specific, generic things that are absolutely not complicated, folks. It is not complicated. Complication comes when people want to try to dilute it to make it look like it really isn't my concepts or my teachings or my lectures. That's what makes it complicated. That's why everybody asks for my slides from the mentorship. That's why everybody says talk little. You talk too much, because most of them are not English speaking individuals and they want to translate it into their local language. And if you are running a YouTube channel, I'm going to toss this in real quick. If you're doing a YouTube channel and there's a dozen of you right now that I'm getting ready to do copyright strikes against, You're translating all of my mentorship videos into your local language, and I don't give you permission to do that. I've already taken down several channels that have done that. And you can be mad at me. You can send me hate mail. You can do all those things and be mad at me about that. But I've already said that I don't give you permission to do that. If you want to do that, go write a book on Amazon. That's what people have done. Okay. I can't stop you from doing that. And everybody apparently wants to buy them. So go ahead and go do that. But you don't have my permission to take the work, the time and effort I put into making the charts, the lectures, the graphics, all those things. I did that on my own. You don't have the rights to use them. So you're all going to lose your ad revenue on that, and I don't feel bad for you because I've already warned you ahead of time. So no, you don't have the permission to do that. But Caleb will have whatever he gets in terms of ad revenue to help meet his bills while he works his job, and it helps alleviate some of those things that plague people while they're trying to learn, which is I need to make money real fast, because you can't force being profitable. You can't do it, folks. You absolutely cannot do it. And I said this in my mentorship to my students. I said, listen, one of the best things you can do is create another stream of
Thanks,
income.
RC.
And I
Appreciate it.
gave them permission that, hey, look, if you want to go out and live stream, not teach, that was when I was doing the mentorship, go out and show on a live stream and monetize it, that your development is here. Here's what I'm trying to do. I'm trying to be profitable, and I'm going to trade the forex market, or I'm going to trade, you know, futures, or whatever it is. Some of them trade crypto. I don't like crypto, but it is what it is. The By the way, did you hear about crypto? Or Trump came out and said he was going to make America like the hub for Bitcoin. All of a sudden, Bitcoin fell out of bed. That's interesting, isn't it? But anyway, I encourage my students to live stream, to get a secondary income, because that passive secondary income can be a way of maneuvering the fear and anxiety away from you needing to be perfect in your trades, which is absolutely toxic. Absolutely toxic. You cannot have that mindset as a trader. You can't do that. You have to invite the opportunity for you to be wrong. And it doesn't sound productive. It sounds counterintuitive to say, okay, I invite myself to be incorrect about what my assumptions are about price action right now and when I go into a trade. When you go into a trade, as soon as you enter that trade, you've completely given the responsibility of the outcome to the market. You don't have any assurity that your stop loss is going to get you out at that price. You don't have that promise, that guarantee. The market could happen, especially in the conditions we have right now, where a war can break out in an undisclosed location. Boom, unexpected events, bang, you have a huge gap. And it could gap way beyond where your stop loss is. And guess what, folks? That risk is always there. That's why every brokerage firm makes you sign these risk disclosures, because that's what can happen. And when it happens, you want to sue the brokerage company. You want to sue this one and sue that one, because the unexpected happened. And for individuals that trade with extreme leverage, that would never do that with a real account, but they are doing it with their funded account because all they got to do is pay the reset, or they get free resets because they have an affiliate program with one of these companies. It kind of promotes the wrong idea. Okay, it doesn't matter how many times you can show that you did something right here, but you're constantly restarting these new accounts. If you're an influencer and you keep doing that, you're actually having a detrimental impact on your viewership, because knowing that people have selective vision and selective hearing, they're attracted to when it's right and when it makes money. So therefore, I want to be like this person because look what they just made. But if you're not disclosing the entirety behind everything, and I just blew 25 accounts, or I just had to reset 16 accounts because every one of them just got blew out, it kind of defeats the whole premise behind what is it you're doing following them, except for just entertainment value. So I'm trying not to be anything but straight nuts and bolts. This is what you're supposed to be focusing on. But if I don't lay the groundwork initially on the first discussion here in the first 20 minutes or so, you won't know what we're doing, and you'll just be watching for something and anticipating or trying to predict what it is I'm going to say next, and that's not going to be helpful to you. In fact, it'll probably be very frustrating for you, and you'll either turn off and go watch the usual suspects on live streaming, or you'll just walk away and you don't do nothing with it. And maybe you'll come back to this live stream at a later time, but you'll still have this bitter taste in your mouth, and you won't be willing to write down the things I'm talking about and preparing yourself. You have to absolutely prepare yourself to learn properly. And if you don't have that mindset going in, everything you do, everything you focus on will be the wrong things. They'll all be doing things that are, moving towards consistently profitable. That's the number one goal, whether it be learning from me or learning from anyone else. It's not a task that is outside your grasp. Right now it might be because you're brand new. But if you do the things that I'm going to suggest to my son, and he doesn't rush, he doesn't rush to go and try to pass a combine, he doesn't rush to get a payout, he doesn't try to trade every single fluctuation in price, he doesn't try to do everything that I've made available to all of you, which is what most of my students try to do. They all dabble too much. And if you simply go through this simple question and answer for yourself right now, are you someone, now if you're not paying attention right now, you're distracted, you're going to miss it. But the type of person you are right now, are you someone, if someone says to you, I don't think this is possible, and it doesn't have to necessarily be trading, I don't think this is possible, or I don't think that you can do that. Are you someone that says, they're probably right? Or I'm going to show this person they're wrong, and I'm going to show them 12 ways that why they're wrong. And I'm going to do beyond what they thought I said or I was going to do or I could do, and they said I couldn't do. I'm going to do more than that. Okay? Because right now we're going to divide you all as an audience, because either you're going to be someone that's going to be influenced and held back by someone else's opinion or suggestion on you, or maybe you've watched someone else receive criticism. Okay, you've watched other people receive criticism, and then you somehow latch onto that like it was told to you, and you feel emotional about it, and you have a psychological response, and it was never directed to you, but you personify it and personalize it to yourself. That's very telling. That is a barrier for you as a trader. You may not realize it right now, but Friday I'm going to cover the contrasts of all that. You may not know the answers to these things right now today because you want to think about what I'm going to tell you. And you all want to be able to say, yeah, I want to be the guy or gal that says, if you can't do this, I'm going to prove it to them, and I'm going to do this and do that. Chances are every male listening is probably going to be wanting to do that. But in honesty, all of you aren't really like that. You're influenced by other people's opinion, and it makes you feel unsure about yourself. It may be causing anxiety. It may feel embarrassment. You may feel like you don't feel like you're going to do well because of someone else's opinion about you. Or you have that spark, that inspiration, that, well, kicking the hinder parts, if you will, to now do something because it's a challenge that's been laid in your hands. It's like, now this is what it's like for me when I listen to other people. When they say this can't be done or no one can do that, I am the person, my personality is you tell me that that can't be done or that I can't do something, my mind immediately switches on. I'm in predator mode. Like I'm in there looking for every way to come back at them and say, this is how you're wrong. And you were wrong here, and you were wrong here, and you were wrong there, and you were wrong there, here, there, everywhere. And I want to bury them in it. That's my mentality. And that's not a strength. That's just how I interact with outside influences. And that stems from a childhood that I had no control over the factors and environments that I was left in, which were dangerous and they were hostile. So as an adult, now I seek control all the time. I am a control freak. Everything and every aspect of my life, I have to have control over it. If I don't have any control over it, I have no interest in it. That's my disposition. That's how I am. You may not be that way.
You guys see
You may be
that
very, very
inverse?
passive.
It did. So
And you
this is
may
the
be
inverse right there on the
very
8:45 a.m.
lethargic in
So we're
terms of
probably going to be hunting the
responding to
top
things
side
that
on
are met
this from the looks of the
as a
chart.
challenge towards you. And you may be using that very
So that could
perception
have been your entry right
about the
there,
marketplace, and
especially
that's your
with that big
hindrance. That's the
green
barrier
candle.
that you have to. Yeah, if you
So
have that
that big red
mentality,
candle,
you're
your
going to
entry
have
could
to
have been
break
this
through
one
that,
right
and it's
here.
not going to be easy for you because what you're seeing is
Really, really cool setup.
most people fail doing this. Most people are
So
not consistent. Most
from
people can't even determine where the
380
market's going to go, let
to
alone get in it without having
520.
stopped out or
So that's a
managed risk
50-point
appropriately.
move
That's the
to the
majority.
upside.
That's the truth about this industry.
So definitely
Very,
he's gonna
very,
hunt
very few
the
people
buy side
can do this
liquidity
consistently.
from the looks of this
And
the chart.
you know this, but you're still willing to watch videos. You're still willing to try to practice and dabble because you're waiting for some kind of
So
magical
you see
thing to
how
occur where it
the
clicks for you
market is
with
actually
no real
going
effort,
up.
with no real study, with no real logging and journaling. You think it's just going to happen for you. That's not realistic. So part of this mentorship will be using the tools and resources of journaling properly. But what is it you're supposed to be journaling anyway? Because if you don't know what you're doing, you don't know where the market's going to go next, because you don't know bias, you don't know profiling, you don't know session characteristics, day of week characteristics, seasonal tendencies, all those things. I'm going to present it in a nice, neat little package, but it cannot be done in one video. I don't I don't care how many people go on YouTube and try to say, I watched all of ICT's videos and now I'm going to show you in 5
Started at
minutes how you can do it.
840.
You don't have to do that. I
Oh, where
promise
did
you.
it touch? It touched the
Okay,
liquidity.
here it
Okay.
is, $500,000. Okay,
They
go
like
out there.
testing
You
for
don't know what you're doing right now.
reason.
Go out there and watch one of the 5 Minute Trainer YouTubers. Okay, and you got 4 weeks to pass a combine and make $100,000 by the end of the year. If you can prove that, I will give you $500,000. I will drive to your location as long as you're in the states. I will drive because I don't fly. I'll drive to your place and you can live stream me giving you a $500,000 bank check. Okay, that stuff doesn't work, folks. You're gonna have to put some real effort into it. You can't condense it. You can't reduce it down. Okay, and a lot of people don't realize what I just did. I just made a lot of those guys mad, and now they're all gonna really do their little micro
So now you can
mentorships.
move your
And really,
stop
what
right
that does
here
is gonna
below
bring
it.
more traction back to
That would
this
be
mentorship because they're gonna
740
work for free.
from the looks of the
But
chart.
anyway, see that? Everything's predetermined. He's maniacal. He's a mastermind. He's diabolical. Anyway, the very first step is for you to determine where you are mentally and then determine ahead of time, preparing yourself what adversities are going to be in front of you. For the folks that are saying, okay, you say I can't do this, or someone else is saying that you can't do this, you're going to go at it 100 mile an hour. That's good that you have confidence in yourself, but the problem is you're going to overstep that and become overconfident. And then as soon as you're met with that first adversity, it's going to really hold you down. And it's going to cause you to second guess the next step of stepping out there in faith and determining what it is that you're trying to do or practicing. And then what you end up doing is the initial strength is I'm strong, I'm confident, and nobody's going to tell me I can't do it. I'm going to do it better than I would have done it if they would just invited me to do it casually. But now because they said I couldn't do it, I'm going to do a superhuman Olympic feat of it. And by doing that, what you end up doing is you increase the level of adversity, the difficulty. You put a time limit on it, which is the worst thing in the world to do. You absolutely put a time limit on how fast you should learn how to do something. As soon as someone starts telling you, I'm going to teach you how to do ICT or anything else in this number of days, absolutely, I promise you, they are full of grade A manure. They're lying to you. That's clicks for money. They want you to either buy something they're going to upsell to you later on, or they want you to keep watching their videos that are not going to help you. They may be entertaining, but they're not going to supercharge your understanding. They're not going to make you faster at learning it, okay? The only thing they're doing is trying to capitalize on a market that's huge right now, which is TikTok mentality. You know, 10-second, 15-second, 30-second time span of attention span. And I have no patience for anyone, zero patience for anyone as a student that thinks like that. I broom them quickly. I get them out of my face. I don't want to have any interaction with them because you're absolutely lazy. You're absolutely lazy. You want it easy, you want it real fast, and you have unrealistic expectations. And anyone that has common sense will tell you that that is someone that will not be successful. Period. End of story. If you don't want to warm up to the idea of how to do this properly and understand, really understand, that's what mentorship is, understanding how you're going to most likely interact with the marketplace, what's a reasonable response to you for you feeling this way or that way should the market produce an outcome that was either favorable or not favorable for you. How are you going to interact with? Let's say the first time you sit down and you try to test something and it takes off and runs like 150 handles in the NASDAQ. What's that going to feel like for you? You're going to feel ecstatic. You're going to be excited. And you're going to feel like, wow, this is a whole lot easier than I thought. And that's wrong. But see, that's the problem with these 20-year-olds that teach. They want you to have the emotional stimuli because that emotional stimuli gives you a rush. It's dopamine. It gives you that physical, feel-good butterfly moment that does not last. It will not last. 10 minutes later, you're not buzzing by that right call that you made, that demo trade that you made, or that you just passed your combine. You all think that I got to get my combine passed and then I can start trading on an account where I can make profitable trades. So you're willing to do everything and anything just to gamble to get it passed. And then once you get there, you think it's going to be easy when it becomes extremely much more difficult because now you don't want to lose that past funded account. And every candlestick looks like a foreign language to you. Even if you understand certain elements of reading price action, it will look completely different. You won't feel comfortable pushing a button because now you're thinking, if I get in right here, what if it goes down to here? Or what if it goes to this high here? Where do I put my stop loss? I don't want to get stopped out, but I got to use a stop. And see, what are you doing? You're trying to protect yourself from a losing trade because that losing trade, even if it's small in
So
denomination,
what I'm seeing
if
right
it's
on
small in amount of
the chart itself, the 1 minute,
real
a lot of wick on the
dollar
bottom
risk,
side. So it looks like we can go to the
the
upside.
lasting
If we
impact
don't, I don't
and
think
the
it's gonna break
depths of
down,
how far it digs
but
into
we'll
your
see how
backside,
it would react on that 1 minute.
it's monstrous because you're creating a demon. You're manifesting your worst adversary because you didn't do everything that I'm suggesting as a starting point right now. It prepares you for this. What do you think basic training is for when people go to the military? It's to get the person physically fit, get them introduced to constant disruption, constant mental fatigue, so that way they're not shell shocked when they get out on the battlefield and freeze up. They're used to being treated like trash, worked out, fatigued, run them, work them hard, talk down to them. There's no hope. There's no hope while you're in basic training. Well, this is what this is like here. This is basic training. I'm not going to sugarcoat it for you millennials. I'm not going to be nice to you and say, honey, it's going to be okay. Let me hold you close and coddle you. ICT's got you, baby. ICT's got you. It's okay. It's okay. That's not what this is. You want to learn how to trade? You want to be consistently profitable? ICT's not going to be rubbing your shoulders for you, okay, and powdering your ass when the market's in front of you and you're ready to take a trade and it's all on you. I'm not going to be there. You have to be able to do this on your own. You have to be able to do this absolutely isolated. You have to be an island unto yourself. When everybody else is on social media saying they want to do one thing or the other, and you look at your model saying, I don't see that, you got to be completely comfortable with that. Not for the basis of just simply being a contrarian alone, but for the basis of, okay, I understand what I'm looking for, and this is just further confirmation that the herd of sheep out there are expecting this. So I know I have a lead pipe sense trade now because every time Dick and Harry out there is wanting the market to go to this level or this direction. And here I am sitting confidently waiting for a setup that's completely diametrically opposed to what they expect. That's one of the things that I take great comfort in watching live streamers, because sometimes they get it right, and that's fine. Most of the time they aren't. And the times that I'm looking for something before I even start looking at their live stream, if it's opposed to what I'm expecting, it's a dead deal. It's over. I'm over the target. I know I'm right, and that's not the goal here, but I know I'm going to use the maximum leverage. Okay, so whatever my maximum leverage would be for that individual asset class or that market, I would be comfortable doing that. But initially, when you first want to do this, you want to be trading. Listen, folks, I know this is going to be unpopular, but you want to be trading with a micro. Just because that funded account says I can trade 5 contracts of the NASDAQ with $3,000 of a cushion, I want you to hear this, okay? And I mean this sincerely, and I'm not trying to be funny about it, but if you're trading more than one contract of a micro with 3,000 cushion, and you're not consistently profitable and you don't know what you're doing, you're absolutely gambling, and gamblers don't last long. You can gamble. There's a lot of people over the years with all these funded account companies. I've had students that's done this too. Paid mentorship students that have gone through it, they've passed combines, they got paid out, and then they lost it. And then it completely undid them. And they can't get it back, and you can't pass another combine. Why? What happened? Did the concept stop working? Did they change the algorithm? No. Now they have mental baggage. They have scar tissue. And now the lessons I taught in those Twitter spaces over the past couple of years, and no, I'm not on Twitter, the depths of where I was trying to take you, a lot of you haven't gone to those places yet in your trading. So the lessons just went right over your head. It doesn't apply to me. But for anyone that has actually tried to trade with real money, or had a live account or a funded account and has taken withdrawals from the marketplace, and then they lost it, now those Twitter spaces, now those talking points, those lectures like we're doing right here, they are much more meaningful, and they're impactful, and they are helpful. But when you have a millennial that wants to go out here and say, look, man, this guy's full of crap. You know, he's talking too much. He ain't done anything. He ain't pushing any buttons. How am I going to learn from somebody like that? I need somebody who's going to show me what to do so I can copy them. That's me learning. No, that's not you learning. That's how you grow codependent. And I don't want any of you to be codependent. I want you to be able to walk out there and say, this is what I see potentially unfolding in the marketplace today. So I'm going to build an idea on how the market may, in fact, set this up. And if I understand that this is where it's likely to go, and what I mean by that is, where's the draw on liquidity? Where's the market likely to go? You know, what are we looking for in terms of potential expectations and where the market could trade to? And that could be something like this. We go to, we have relative equal highs right here, okay? Very simple, smooth price level. The market's gone down a lot, several thousand handles. Okay, we had a huge gap, new week opening gap here. So where we settled on Friday and where we opened on Sunday at 6 o'clock last night.
Give me a second. I gotta go to the bathroom.
Eastern time in the States. That new week opening gap, that's a draw on liquidity. But we don't need it to trade all the way up to there. So where is the low-hanging fruit objectives for just short-term bias? This is what I'm teaching you, Caleb, initially. I want you to think about where the market could draw to right now, where it could go to next. And what that does is it gives you something to focus on. And it also gives you a way of measuring every individual candle's formation and what your expectation is as it's forming, and what the next candles should do and how they behave and what it feels like for you when you do this. Because whether you want to admit it or not, when you're first starting, the majority of your time is going to be spent in uncertainty, in times of confusion, It's going to be fearful. It's going to be, well, it's going to feel very anxious. You'll feel anxious. You may even start feeling body symptoms of tinglingness, lightheadedness, feel like you're going to get sick, and you may still only be in a demo because what you're doing is you're elevating the outcome to a level that is not expected. You don't need to put that much pressure on you. In fact, if that's how you're thinking, it's normal for you to feel that way when you first start trading with a real account. That's a normal thing, but there's no way around it. There's no way around that first trade with real money. That fear and that anxiety is something you have to engage it, and that's why I say as soon as you get a live account, first thing you should do is flip a quarter, lowest leverage. If it's tails, you buy it. If it's heads, you sell short, or vice versa. And you do the smallest leverage and put a 15-point stop on it, and just let it happen to you, and get it, break the ice and let it go. But see, a lot of you, if not all of you, you want your first trade to be a winner because you think it's a jinx. Okay, it's somehow an invitation for failure if your first trade with your real account loses money. Like that somehow defines your entire career. It doesn't. It's just one transaction. But the way you overcome that is spending time without pushing a button, studying where price can go, and that's this. We have this short-term high here, post 830, meaning after we had 830, right here we have 836. So the market went below these relative equal lows. So any liquidity below that, they disrupted that and then took it above this short-term high. Took it above this short-term high and traded right inside this fair value gap right there. So when you're watching price, Caleb, you're looking for how the market maneuvers and trades and books between obvious price levels with old highs, old lows, and inefficiencies. They're the only two things you're worried about. You're not trying to predict a direction on the day. You're not trying to be right about 50 handle runs. You're just studying, observing, okay? This down close candle here, after taking out the liquidity, and then we have displacement here. Displacement is where the market runs against a pre-session, pre-day, pre-trend or price swing direction. In other words, it's a counter move to what's already been in play. So the market has dropped here, and then we moved aggressively above this short-term high. This high being traded above there, we go back down to this down close candle. That down close candle is a order block. We have displacement, it took liquidity, and the market has been one directional. Now, what makes that an order block specifically is it has happened post 830. Now, it could have formed right at 830 because 830, the algorithm will start spooling for liquidity or inefficiencies, one or the other. Now, in the beginning, you're going to want to know, because you're probably asking right now, can you just tell us what it's going to reach for? Is it going to go for an old high or old low, or is it going to go for a fair value gap above or below? Both. It's going to go for both. Now, is that complicated? No. Now, to further strip away the complication you're adding to it right now, you're bringing all these things. But what if it's a COT? I didn't say anything about a COT. Yeah, but what happens if the... Did I say anything about those things that you're thinking right now? No, they're not important. The only thing we're doing is we're sitting down at a time when the market is predisposed. That means it's most likely going to do this. And it will do it unless some unexpected event where manual intervention steps in, and you don't know, and I don't know when that's going to happen. What does it look like when the market just starts going, and it starts going one direction, and it doesn't stop? It doesn't go up a little bit, come back a little bit, up a little bit, come back a little bit. That's market standard delivery. Intervention is, think like FOMC. think like CPI, think like non-farm payroll, where if you're wrong, if you're offside right when it hits the market, you're dead. That's what manual intervention looks like. They're many times untradeable. It takes off so fast. You reasonably, no, not reasonably. You're it's unreasonable for you to assume that you can trade that once it starts, because you're literally chasing the wind, and you're never going to catch it. You're just going to frustrate yourself and get placed very poorly, and you're going to be in a trade that's going to be highly anxious and stressful. And that's not trading, that's gambling. Okay. So when we look at individual setups like this, you want to sit down in front of the marketplace right before 8:30. Okay. Preferably 8 o'clock. And you want to look at where the highs and the lows are in deference to the 1 minute chart and the 15-minute time frame. So I'm going to change this chart over here to 15. So here's what 15-minute looks like here. And if you look at where we came from, see this high at 7 o'clock in the morning? That's this high right there. See it on the right chart? So this chart, this larger chart here, is the 1 minute, and this is the 15-minute time frame. 15, 5, 1 minute. Those are your first three time frames to worry about. Okay, and I shouldn't say worry, because it's kind of like gives you a subconscious concern that you need to worry about it. You don't need to worry about it. But the levels and inefficiencies on the 15-minute time frame, the 5-minute time frame, and the 1 minute time frame. If you're brand new, you don't know how to trade ICT, you don't know how to trade price action, you don't know how to trade period, okay? You don't need any other time frame. Okay, you don't need anything else. You don't need a daily chart. You don't need an hourly chart. You don't need a 31-minute chart. You don't need a 17-minute chart. You don't need a 15-second chart. You don't need anything below a 1 minute chart. You don't need anything else to do what I'm going to teach you. Okay, this is what you're doing. You're studying price at specific times of the day. If you're not writing this part down, you're blowing it already. So between 8 o'clock and 8:30 in the morning, New York local time or Eastern Standard Time, in the US. Everything I mentioned in terms of time, if it's the time that matches New York local time. So set a clock. If you have your smartphone, there's a way that you can pull up world time and put one in there for New York. And you'll always know what time ICT is saying to look for these things to happen, because they're never going to not be there. Write that down again, okay? And underline it. This is always, absolutely, without fail, it's never not going to do it. It's always, every single effing day, it's going to do this very thing. It's going to do it. It's going to absolutely do it, because there is an algorithm, and it does this to spur on emotional interest or tangible orders that are actually sitting out there. Real orders that are sitting above and below or inside of inefficiencies where the market needs to offer fair value to the marketplace. So what is it reaching for? It's reaching for old highs, old lows, and inefficiencies. That's the fair value gap. SIBI, VISI, that thing. So once we know that the market is likely to do these things, that's a characteristic. It's an algorithmic characteristic. You don't need anything else besides this element as a foundation to what you're trying to trade, and you can make all the money you'd ever want. I'm going to say that again in case you missed it. You're trying to find, right now, you want the daily bias, and you want to be able to buy below the open and hold for the whole entire day. But are you really doing those things when you try to trade? No. Because as soon as you get 10 handles or 10 pips or whatever, you start struggling with holding on to the trade. You're paranoid that that winning trade that you just found out just fell into your lap. Oh my goodness, I'm winning. This is something new. I need to secure this. But then you're thinking, oh wait a minute, I'm supposed to be holding for the daily range, and now you're wrestling, and that becomes a real hard wrestling match, doesn't it? It makes you feel nauseous. And if anybody tries to talk to you, even if they love you, your spouse, your girlfriend, your boyfriend, your child, your dog comes over and nuzzles up next to you, any other time you're like, oh, this time, get away from me. Can't you see I'm trying to worry about this 10 pip handles move? The weight of the world is on my shoulders right now, and you're coming at me with this? You know what it means. You're stressing out. Why? Why would you have that response? Folks listening to headphones are like, oh man, this guy. You're awake now, aren't you? But that's the reality. That's what it's like. And you'll feel it if you've never been there. You'll feel it. But the reason why you feel that is because you don't know what you're doing. You haven't done this part long enough where you're completely desensitized to, okay, I'm doing this exercise to get comfortable with anticipating price moves. I'm getting comfortable with not knowing what it's going to do next candle, this candle, 5 candles from now. But I think it's going to draw to specific price levels. So if it clears that short-term low we talked about, what's it going to reach into? We have this inefficiency here. How long does it take to do that? And then you record, you screenshot this, and you say, okay, well, it took 1, 2, 3, 4, 5, 6 candles from this volume imbalance to run above this short-term high and get into this SIBI, which is a sell side imbalance, buy side inefficiency. A fair value gap that has a down close is a SIBI. Okay, a fair value gap that has a up close is a BISI, buy side imbalance, sell side inefficiency. So what you're doing is you're measuring, because you have zero baseline experience, you have no continuity in what it is you're reaching for or looking for in price action, and you study how long it took and you record this many minutes. And you also are honestly going to record in your journal within the screenshot, like maybe over here or somewhere over here. You're going to record what it felt for you physically. Were you anxious? Did you second guess that it was going to run there? Did you feel excited the entire time? Were you impatient that you thought it should have moved there sooner and faster? Did certain candle formations cause you to, doubt it? Did you have a point at which you thought that it was given another opportunity to trade to, or not trade to, but offer another entry, like say, for instance, if you wanted a pyramid. Pyramiding should not be part of your repertoire yet. That's something that you need to be doing maybe a year after trading with one contract. Oh, come on. You want to learn how to do it correctly, this is the way you do it. There's all kinds of time and opportunity for pyramided trades, but you first have to get good at trading with one micro contract. One micro contract. Because what that does is it removes, hopefully, this is the only thing you can do to fend off the greed and fear. You can't blow the account if you trade with one micro and you only take one trade a day. It's physically impossible for you to go out there on day one and blow the account. But see, that's what your subconscious is fearful of. I don't want to blow the account. I don't want to have a big losing trade. I don't want to go into big drawdown. Okay, that's easy. Don't over leverage your account and don't take more than one trade a day. But ICT nothing. If you want to be able to do it correctly, you have to do things with a process. There has to be a logic behind it. There has to be some measure of rule-based thinking, and then you have to adhere to that. If you don't want to adhere to rules, I promise you, you're going to lose, you're going to fail, and you're going to blame me, you're going to blame everybody else, you're going to blame the prop firm, you're going to blame the brokerage firm, you're going to blame everything but you. I know this because I did the same thing as a 20-year-old. I did the same thing numerous times. I have students that repeat the same thing. They sent me hate mail years ago. Oh, you didn't teach me right, this, blah, blah, blah. And then later on, they went through it properly, and then they send me emails apologizing. It was a mistake on my part, ICT. I didn't listen. I went back and re-listened to it all, and I made all the mistakes you said I was going to make if I didn't listen and just plunged ahead and did what I wanted to do. Now I did it the right way. I listened to what you were expecting in terms of a properly mindset student that follows the rules and accepts the adversities initially that are normal. They're all normal growing pains. But see, you're trying to be the exception. You don't want it to happen to you. You think it's going to be candy bars and milkshakes and just everything's sweet and lovely and butterflies are going to come land on your hand and everything's kumbaya. No. No, 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 no. As soon as you push the button, you're asking the shark to take a leg off. You're asking that lion to take your face off. You're inviting it. That's what it is. As soon as you enter these markets, you've entered the jungle. You've entered the deep waters. And honey, everybody's hungry. And if you offer it up on a silver platter, they're going to take it and eat it. And you can't be upset about it. That's the currency here. Yours or mine. Mine or yours. That's it. It doesn't matter how anybody else trades. It's, are you liquidity right now? Are you liquidity? Because if you're liquidity, you're lunch. I go in and I'm looking for lunch. I'm looking for the liquidity. I'm looking for reasons why the market will trade to this level, why it could potentially trade to this level, but I don't need it to trade, for instance. This is the draw on liquidity. Draw on liquidity is just a initial reasonable assumption on our part to determine a directional move that could unfold. It does not mean and it does not define the absolute terminus to a price run or the be all end all target. In plainer terms, the market's probably going to keep moving until it gets to this level. It doesn't mean that it can't have retracements lower. It doesn't mean that it can't make a lower low than it's done here. Highly unlikely, but it's still an initial idea. So when you're first trying to learn how to read these markets, when you're first trying to determine where the market's likely to go, you have to strip away everything that you're trying to force into reading every single individual candlestick. And if you watch a lot of my videos, or if you have a lot of notes, or you've dabbled in things, chances are you probably already have a pet technique that you want to be yours. And you may not even be good at using it yet, but you just want it because it has a cool name, like a Reaper fair value guy. You know, when I taught that to my private mentorship, they're like, "Oh man, that's gonna be my thing. that's gonna be it for me." You know, or Event Horizon, which is the midpoint between two new week opening gaps or new day opening gaps, and because of the names, okay, these names are meaningful to me. They're not meant to inspire you to want to do them over another. It's just that's what I name them. I got 81 of these things, so it's a way for me to keep track of what its purpose was, and or it kind of puts a little stamp of when I discovered it and something had a impact on me and it was a cool name or inspiration to it. So when we're looking at price, as a brand new student not knowing what to do, you want to make this kind of like a game and a discovery, something fun, not a video game, okay, but it's a game of determining, does it have what it takes to move to these highs here? A way of saying it to yourself that's very disarming. It's okay, I see how this is smooth. These two highs are relatively equal. That looks like a real nice, obvious flat space in price. We don't see that same flatness down here. You see that? So in other words, if you had a shark, if you had two sharks rather, you have two sharks in front of you. One has had its teeth removed. Well, that would be represented something like this. This is the shark with no teeth. It's basically got gums, okay? There's no teeth there. Down here, there has been a shark attack. How do we know that? Because we can see the wounds from the teeth, the jaggedness, the jaggedness, the jaggedness. And now it's going to another frenzy or feeding. Where is that? Well, we've just created one. We have this high here that's really close to this one. You see that? So you observe price action. and you're looking for areas that look real smooth and safe, where they say peace and safety, sudden destruction comes upon them. Any time that you're looking at price action, and it doesn't matter what time frame you're looking at, okay? If you're looking at it through the lens of a second chart, sub 1 minute, or a weekly chart or a monthly chart or a quarterly chart where it's 3 months of data compressed in to make the candlesticks, it does not matter. This principle is always true. The market will go to an area of smoothness for the purpose of disrupting any orders that would be resting above or below it. We've already mentioned down here, let me show you. Now, don't be discouraged if you can't watch this stuff real time and see it or outline it in advance. It's okay for you to come home for work and look at your charts after the fact and go back and look at this and study it as if you have obviously the benefit of hindsight initially, but you don't want to stay in that very long. So you're going to have to procure yourself some instruments that will allow you to watch price action, not with market replay. Look, I am not a fan of market replay. I absolutely loathe it. I hate it. I can't stand it, and I wish it wasn't available. I wish it wasn't even available to anyone else, because it's a crutch that allows frauds to be able to sound like they're smart and teach something because it's already happened. If you can do it over live price action, not just once in a while, but continuously, and your audience or viewership can see this, then you have earned the right to have a voice. And then people should have no problem sitting and listening to you lecture and talk about what you think is likely to occur, because you have a sound basis or foundation to what it is that you're talking about. And therefore, because you have a track record of being able to talk about before it happens, it removes the anxiety that is reasonable for everyone to have when they first sit down and listen. But when you, as the student, and you don't have the ability to watch it live because you have a job or you're in university or you sleep, like you have to sleep, right? And your place in the world and your general geographic location may not be conducive for you to trade at 8:30 in the morning New York local time. You may have to trade in the London session. And yes, Virginia, I will be up during the London session doing one of these or two of these lectures in a week or two. Okay, so we're not focusing on one specific time of the day, and I'll come back to that section where I was telling you write down the times of the day in a moment. But when we're looking at it initially, you don't have to see this real time to get a collection of screenshots for your journal. But if you don't do this and journal and screenshot and annotate your chart and study how long price runs took place, how many candles did it take to move there, was there any kind of formation in the price delivery that would have caused you to not trust it unfolding? Now that's going to be very hard for you to do, because initially, especially the men, they're always going to say, no, I would have never second guessed it. It would have been easy for me to hold on to that. And these same people, when they get into a trade, if they ever were to do it in front of you, they don't have any conviction, and they're going to hurry up and bail out on the trade. Okay, I got to get out of this. I can't stand the pressure. It's moved 5 handles. But they call 30 handles or 50 handles above or below, and they get out at 5 handles because the pressure of it not doing what they expected to do and then realizing a loss in front of someone, that's a lot more pressure for them, and they don't want to have that. So what's more important, their image or them following a model that they have seen works and have trusted and did the back testing and they have the data behind it? Their image. And that's not someone you should learn from. Okay, I'm just tossing that out there. So what we're looking for always, the first thing that you're looking for, Caleb, is where is the market smooth on the 15, the 5, and the 1 minute chart. Is that complicated? Nope, it's not complicated at all. It's real simple. What does it look like to be smooth? Well, when you have price levels that create highs, like this swing high here and this swing high here, they're real close to one another. See that? When you're looking for relative equal highs, here's your secret weapon for it, okay? How do you know it's a high probability relative equal high that's likely to get swept or traded through? How do you know that, ICT? What differentiates that from any other? Okay, it's this. If you have two swing highs, if the one to the left is slightly higher than the right, you have a very, very high probability that they're going to want to take it above there. Just like you see here. We have a high, and then the swing here happens to be just a little bit lower than that. Here's what's going on. This is called priming, okay? Priming is where you continuously create, inspire, or manipulate the expectations of a large number of investors. And they think, oh, it's going to go through that high. But then there's a lot of folks that don't want to see it go there because they went short. So when the market goes up here and stops and turns down, what that does is it creates a sympathetic sigh. The shorts are relaxing. If the shorts are relaxing, what are they saying? They're saying that this is now what? Resistance. So anyone that takes a new short position, where are they going to think that the safest place to put their stop loss is going to be? Right above these highs. Why can we trust that they're likely to take that relative equal high out? Not that it will that session that you're trading, but it's high probability that this will be swept when the second or the one to the right, that swing high is lower than the one to the left. That frames these two as relatively equal. Okay. Same thing is occurring here. We have this high here, this high here, this one being slightly lower than that one. So when the market went up like this and we had this drop down, what that causes is a sympathetic sigh. What is that causing people? Anyone that went short here, they feel like, okay, that's scary because it almost went to that high where their stop loss would be if they're trying to go short in this area. See that? So what do you think it looks like when we have relative equal lows? What would be a high probability relative equal low that the market is likely to draw down and go below? It would be a low that has a slightly higher low. In common terms, it's referred as a failure swing. Okay, so a failure swing. Now a lot of people say, "Oh, see, he's just reinventing." No, see what you're trying to trade that. That's what a failure swing is. When you're trying to trade, long or short on that second pass that doesn't take out the low or take out a previous high. That's selling short a failure swing. Okay. What I'm teaching you is how to identify in price action where the algorithm will refer back to and why. What are the central tenets as to what the algorithm is referring to at a specific time of day, most important. And then it refers back to these because, okay, it sees this high based on time, and then the high prior to that one is here. So it's very simple for the algorithm to call that information as an array and say, okay, this high was at this time, and this high was higher than prior to it. And they're in close proximity. What's the filter? I'm not going to tell you that, but it's not very much in terms of difference between the price. And when you have that element, the market will invariably start marching back to those levels. It does not matter. Listen, folks, it does not matter how many buyers are buying the market to go up there and how many short sellers. Okay. The proof of it is just look at a depth of market. Look at a ladder. Okay. A dom, not a dome. Okay. I'm so tired of hearing people go, it's not a dome. Do you see an E at the end of that? It's DOM. It's a DOM. Okay, depth of market. Look at those orders. There's no imbalances there. There's no imbalances. There's just as many short orders below the market as there is above. But yet the market will still march and march and march and march and go to the beat of the drum that I tell you it does. It reaches to these levels because it's coded to do this. And if you do this for a couple weeks, you're going to see, oh wow, yeah, this feels artificial. It feels like it's designed to do these types of things because it tends to repeat every single day at specific times of the day. It will do this. Now let me go back to the times element. Every day between 8 o'clock in the morning. This is always New York local time, okay? So it's very important you remember that because I have new people coming all the time, and they'll say, "I looked at this chart here, and you told me, yeah, but you're looking at it in Bangladesh time." Okay, I don't live in Bangladesh. I'm in the East Coast of the United States, and the algorithm is on New York local time. I don't care what anybody else tells you. Okay, that's what it's on. Period. End of story. You can wrestle with it if you want, but that's just the way it is. Between 8 o'clock and 8:30 in the morning, you want to sit down and determine where are the smooth locations in price action on the 15-minute, the 5-minute, and the 1-minute. Okay, let me go. We've had the 15-minute on. Let's go down to a 5. Okay, so right away you can see that this high here is relative to that one, and this one here also with that. This one being slightly higher than that one. So there's a lot of liquidity that's sitting at 17,820.75. Now, real important, it does not mean that it has to happen during that session. It does not mean that. And that is the underlying risk that you assume every single time you take a trade. You're looking for things that are going to stack the odds of probability in your favor. It does not mean it's an absolute guaranteed outcome. See, I have students that literally take the time and waste their time in writing me an email. Sometimes they're like novels or novellas. And usually it's like 3 paragraphs of congratulating me and worship and whatever. And I don't like that. And usually when I get that kind of stuff, I immediately just push the email away. I don't want you looking up to me. I don't want you worshiping me. I'm not the greatest of all time. I'm not the GOAT. I'm not none of those things. I'm just a guy that has a whole bunch of information and experience, and I want to share it with you. And I want to see what you do with it. But these individuals will say, I need you to tell me how to make sure that I don't have this wrong. I only want to take this pattern. So how do I avoid taking losing trades with a inversion fair value gap or a mitigation block or the breaker? How do I know if it's a breaker or if it's a shift in market structure? Well, that's easy. You have to have a higher time frame premise and a directional draw where the market's going to go. And if you think it's going to go higher, when you see the market creating a short-term turn, well, I'll give you an example right here. We have the relative equal lows here, and the market drops. You see that? So this drop down here, every up close candle on this time frame, all of this right here, that is your breaker. The most sensitive candle or range is going to be the last up close candle. Look at it like this. That's this range low. And see where the body stopped right there? We wick through it, I'm not denying that, but the damage is always done by the wick. And the range high there. Oops, sorry. That is your bullish breaker. But the range here from that up close candle that starts all these consecutive up close candles, all of that is technically the bullish breaker. But the most sensitivity is going to be seen in that last up close candle. That is not supply and demand. That's not supply and demand zone. Sam Seidman would never, ever, ever refer to what I just said. He would never do that. And he would never consider that anyway because we're cutting through candles. Because we're looking at what an algorithm is doing, not some floor trader ticket runner's perception of something that doesn't really exist. So the turn here at the bodies, that tells you what? It tells you the narrative. So what is it going to do? It's going to go higher. Okay, so what at that time would you focus on? Well, you have this short-term high here. The inefficiency that's traded to there. We want to see it trade above it and then act as what? Support, which would be a what? Inversion fair value gap. To do that, what would it reach for next? This high and this inefficiency. Does it do that? Yes. What are the bodies doing? Stopping just at that same level here. And more specifically, and my eyes didn't notice this when I put it up here. You see that little separation? That's a volume imbalance. Go back and listen to the other lectures. You have to include that volume imbalance when you have a fair value gap, whether it be BISC or CIVI. I don't know, put it on there. You go. And you can see the bodies being encapsulated by that. And now the market trades back up into that. The bodies candlesticks are trading inside the inefficiency. It wicks above it, but look where the bodies are stopping. And look where the bodies are over here. Where's liquidity at? Below here. Nothing in here. This is all very balanced price delivery because it's back and forth. Every other candle is overlapping the highest high and the lowest low, pretty much kind of like coloring it very, very, very good. Back and forth. All this price action is back and forth versus then we have all these run where we have separations.
That's crazy.
In here,
so like he was talking
back down
about
into that breaker.
if I pause the video, like he said, this was a breaker block right here that it created, and then out of nowhere, it pushed back up now. Now it's going to be sticking to this buy-side liquidity, and then buy-side liquidity right here.
This response right here to what it's just done there, that expectation and response in how price can react to levels like that, that's a nice little scalp right there. I mean, look at it. It moved from 515 to what? 596. That's a good run. You can't get 20 handles out of that on a 15-second chart. You can if you know what you're looking for. Now also notice that we've created again high, lower high, high, lower high, but real close to one another. When did it form?
So
Prior
you guys are seeing, right?
So we have 8 to 8:30.
You see how it just wicked the candle pretty much out of this balanced price range right here. So this is pretty much a breaker block that he talked about. So once that breaker block formed right there at around 9:45, that's when the algorithm is gonna go seek for the higher liquidity, which is the buy stop, which is you see all this. This is what he was talking about in this video, which is really, really cool. Like to see it while we're getting recorded is the reason why I like to live stream my whole process of doing, it's just a documentary, right? What is my emotion like that day? What am I chasing P&L rather than, just looking at the market? Because the market itself is pretty much just storytelling. As long as you understand how the market works and the structure of it, I think you can literally just see for yourself that this is an easy concept that he teaches. So definitely I like it. I like how he talks about that. Really, really on point. That's why you guys need to see all the old videos. What was your mistake during that day? When I make a mistake, I usually just go look back at my videos and see my reaction of like my emotion. I do journals now. I'm starting to do a journal for every day, what I do, and then, record my process. But definitely this is really, really cool information that you can get from, trading the ICT concept. So if you guys are learning how to trade, make sure you guys go check out his channel. Really, really, instead of spending time, from other channels and stuff. Definitely, I like how he really, really cool information. So I got a comment that said, profitable or nah? I'm pretty profitable. I just say I'm profitable ever since I took a break. Last week I made $4,500. It's like $1,600, I think. Let me go check right now. 1600. Yeah, 16. So 3 accounts, 1678. $1,676 on 3 accounts total. Yeah, so 1,000. The other one is 1721. So pretty cool. Really, really cool. I like the mentorship. The mentorship 2024 is it's pretty much a an easy concept. Once you understand the 2023, definitely recommend you guys go check that out. The mentorship, so that you guys can learn the basic, the fair value gaps, the seeking for liquidity, the buy stop, all that stuff. And then next thing you know, it's just clicking. Everything is just like storytelling. Now you can actually just risk manage yourself. Just risk management. That's all it takes.
930, because it's going to do what? It's going to look and seek the liquidity or inefficiencies. So here's 930 right there, forming on the bullish breaker. It trades down, and then we have relative equal highs here. I don't like to usually do this, but I have to do it for the sake of discussion. So we have these relative equal highs, this high and that high, relative equal high, and we have this area up here. So if the market's going to do what? If it's going to make a punishing move towards the shorts that want to see it drop, because the market has dropped early on, 7 o'clock in the morning, okay? And we have all these very clean levels. What did we just do here? We have a low. It was traded down into. It disrupted this little area in here. So it's made this area jagged. Remember I was saying earlier where the market's real smooth over here versus what it was doing down here. Where has the work been done? Meaning, if there is a group of traders that are very cannibalistic and they tend to be more correct than wrong, or if they are the ones that generally make the money more consistently than the ones that don't. In other words, think of like the World Series of Poker. Okay, if you ever watch that, it's really fascinating to see how the long-term players that always find themselves at the final table. They may not win, but they always find their way at the final table. That's experience and that's skill. Well, you can see those things in price action. They're like fingerprints, okay? You can see when the cannibals come in and they devour the pygmies. They go in there and just chew them all up. And it's where the market is made jagged price delivery. Always, it's always like this, folks. It's never not going to be hidden from you, okay? It's always plain sight. But see, you're so enamored by animal patterns, harmonic patterns, gimmicky named supposed retail indicators. Everybody's got a new indicator. I got one for you that's going to beat all of them. It's the open, high, low, and close, and the clock. How about that? How about that? Catch me outside. How about that? Okay. It's simple. And all of you complain, not all of you, but just the asshats do. Oh, this is complicated. This is convoluted. So-and-so teaches this so much better. Okay, I don't see so-and-so doing anything. I don't see so-and-so doing anything but using market replay and trying to convince himself everything he says after he says it. So we had these relative equal highs swept here. See that? Case study, bullish breaker to there. So how many candles did it take to do that? You screenshot it. How many handles did it run from the low to that relative equal high being taken out? And once it does that, keep the chart active with it on there, but then just make it very, very light. Well, not that light, degree. Make it light. So that way you can still see it, but it doesn't have all of your focus. So that way it allows you to focus on, like, there's a fair value gap here. We traded down into mid gap, which is this wick here. Since price is above it, that makes it a discount array. Consequent encroachment of that trades to it. We want to see it run above this high here. Some of you that are trying to learn how to do this are having a blast with this, because not only am I giving you things to talk about in your own journal of focus, but you're also seeing things unfold over a live chart, and you're watching it on your live chart. Okay, so this is not market replay, it's not delayed data. Okay, it's not after the fact talking narrative over a chart. Everything that these asshats leave comments on in my YouTube comment section, you can't see, but I see them getting amused by it. So here's the relative equal highs there too. So now, same thing here. You want to mute that in terms of its importance. And now you want to see, does it have the wherewithal to run aggressively for that 17,820.75? Any of this seem complicated to you? It shouldn't. I already know what you're thinking, and some of you said it out loud. Yeah, it's because you're saying it. Now, when you talk about it, it's so obvious. When you talk about it when it's happening, I can see it when you point it out. I just can't point it out when I'm doing it. Right, you're just learning it. You expect to be able to go out there right now if I turn the live stream off, and you're just going to just know how to do it right away because you watched me disclose one or two things in one element in the marketplace. Now you're suddenly going to know how to do it. Nobody can reasonably expect to do that. You're placing too much emphasis on being fast. I got to learn how to do it right now because the market's going to stop working next week, next year. I thought the algorithm was supposed to stop working this year. Whatever. Get out of here. Get out of here. The batteries don't run dead on this, okay? When the markets are dead, then the algorithm won't work anymore, okay? But the point is this. The very, very first thing you're doing as an undeveloped, unrefined trader, someone like my son, Caleb, okay? Don't be offended by that, son. It is what it is. I've called you worse things. The idea is that you're looking for the smooth areas where the price is so obviously being defended and being presented and being offered for retail-minded trades. See, I don't look at charts. I absolutely don't look at charts and think of what retail pattern here I can use to get in sync with a price run. Look at that beautiful delivery. Right to that line of balance there, which is inside encapsulated in that SIBI. Went right to the high of that. Now, when you're looking at price, you're looking for the obvious, very, very, very smooth relative equal highs or relative equal lows. How do you know which one they're going to go to? How do they know? Well, I'm sorry. How do you know? How can you trust? How do you determine which side of the marketplace it's going to reach for? Because what this is going to do, it gives you the initial building blocks to understanding bias. Oh, you didn't realize we were going there, did you? You didn't realize with all this jawboning, and half of you quit watching because I was talking about things that wasn't interesting. But they're coming back to the channel now, or later on they'll say, damn, it went right to where he said it was going to go. It did exactly what he said it was going to do again and again. And it's going to do it tomorrow. And it's going to do it Wednesday. And it's going to do it Friday. And it's going to do it next week. And it's going to do it every friggin' week that I want to stay out here and do it live. Okay? That's just the way it works around here. That's the way it is. Because I understand what this thing's doing. And then you want to screenshot that. Okay? So when you're looking at price action, you want to be able to determine what in this whole scheme of price delivery, what does it do in terms of resonating with you? Where would you feel confident? This is the part that a lot of my students skip over. They don't do any work with this part of it. They ignore it. They assume that it has no bearing on them. It doesn't have any basis or placement in them. Okay, because they want some kind of gimmicky little 1, 2, 3, get me in the trade. Where's my stop supposed to be? I only want a one-handle stop loss like ICT. I want to be able to do everything perfect right from step one. I don't want to have any adversities. That's not realistic because you're going to have a whole lot of adversities. And you have to invite that. Be comfortable with it because that's where it's going to highlight your shortcomings in your understanding, and it's going to also teach you how to overcome it. Because once you identify what you're having an issue with,
you see that there's a huge pullback
in your relationship. Like
once it touched that liquidity.
new spouse.
A big pullback.
And you genuinely love
That's
them.
how much point is that? That's a 100 point move
They
in
haven't
like
been
a minute.
forthright in telling you what
That's
character
insane.
flaws are that really
That
get under
is
their skin, because they
insane.
don't want to offend you, because they
A
don't want to hurt your
100
feelings.
point move.
But wouldn't you want
August
them,
5. Wow,
sincerely,
it's
wouldn't you
just
want
insane.
them to tell you in a way that doesn't hurt you, that doesn't
Yeah.
jar you or make you feel offended that you want to go run to the bar and cheat on them? You would love for them to say, hey, I love you. I sincerely care about you. I want us to be together. And that romance is what you want with the marketplace. You want the market to open its arms and invite you into an embrace and feel its bosom against yours. And that tenderness and that love and that acceptance that I've always been waiting for you and you're finally with me and I'm never going to let you go, honey. I'm never going to let you go. See, that's what you want. You want that romance. But really, what this is a dysfunctional element of family. And what it does is it says, listen, my husband's away. Come on over. The bed's open. And you want to go over there and romp around, okay, and find a spouse out of that type of thing. And you wonder why you end up with an STD or a broken home. That's the way it works. But see, you think it's a love story, it's a romance. It's not. It's a toxic relationship. And one person in this relationship has to be able to be reasonable. And at some point, the person that's reasonable has to say, you know what? This isn't healthy for me anymore. So that means I have to turn the charts off. I need to stop following this market on this time frame right now because it's not healthy. But you can't arrive at that until you do rule based ideas and you break things down modularly, very simplistic. Nothing that I did today, nothing is complex. I outlined every single thing. Go back and watch the live stream. Every single thing was in advance and shown to you on a 1 minute chart. This would be further amplified if I was showing it to you on a 15-second chart. If you have the capabilities, I'm not saying you have to, but if you have the ability to look at a 15-second chart, study every level I've outlined here and the logic of why it was going to draw up into that 17,820.75 level. I gave you the bias before we really essentially started today. I explained to you in very, very bland commentary, almost boring really. It didn't seem scientific. I used analogies that I thought were very simplistic. You know, when we're looking at areas that are very smooth, contrast this area up here, how that was very, very smooth. And these, remember these levels over here? I told you this one. In addition, if you weren't looking at that, that's the benefit of looking at 3 time frames. Because if you can frame an idea of why the market's likely to draw to a high or a low or inefficiency that is completely visible on 3 time frames, that means you have 3 time frames telling you, hey, pay attention to me. And if that time frame or those time frames are in agreement with a relative equal high or a inefficiency above the marketplace, that means like something like this right here, or this right here, or this right here. They're all stepping stones. Notice that? They're all stepping stones. Inside the context.
I'm not trading anything. I'm just studying their Hinto. I'm studying ICT Concept. It's the 2024 mentorship. What about you? You're studying right now? I'm studying instead of just, going out. I'd rather just study for next week. So I'm pretty much just studying the 2024 ICT mentorship. So if you are a trader and you are, whatever is your concept, your strategy, it's all up to you. But for me, I trade. I use the strategy ICT concept. So right now I'm just on the first episode because I haven't watched it. I watched his other mentorship, but this one is the newest one. So trying to catch up with the market also. what happened because I took a break from trading. So now I just trying to catch up, finish all my homework. Everybody is trying to go to sleep and stuff. I can hear the kids still playing, but right now I'm just studying while they play.
Darwin, don't close the door. Darwin, don't close the door.
I'm not closing the door.
Do you remember you closed the door? I was waiting for you.
Yeah, you go with your dad. But yeah, Tarhento, just just studying. That's what I'm pretty much just focusing on. I did all my homework. I'm done with school. Now next week is the next modules that I have to do, and right now it's just proper planning now and trying to get everything else situated. Since I got nothing to do for the weekend. That's all up to the bad things. Because it's risk management. Once you learn the structure, once you learn the concept itself, it's all about risk management. Yes, I made $4,500 last week for the week. Took a loss on Wednesday, but I gained it all back on Thursday. So pretty much it's a good concept. I like it. That's why I am just simply just studying it, perfecting the craft of trading, all that, and also why I live stream every day, Monday to Friday, but the weekends, if I have plans on the weekends, I tend to not just stream. But now I'm just like, since I'm studying, might as well just live stream this while studying and also talk to you traders like you, and what's your strategy and stuff. So that's like my goal is, talk to other traders, learn their strategy, because I love to learn and I want to improve my process in perfecting the craft. So that's pretty much it, man. That's what I try to do. I'm not here to be what do you call it, trying to be those people that show us off, all that. No, I just want to see you guys process. How do you guys tackle the market? Explain to me, like, because I'm fascinated by it also. Really, really, because we are all traders. I'm pretty sure you got different kind of strategies. I'm pretty sure you're probably a momentum trader, all that. But for me, it's just just wanting to know the structure of the market. That's what I want to learn, so I can follow it. Yeah, it's up to you. You've been doing for 5 months. Highly recommend you doing paper trading, and then getting funded from other people. But I do believe it's what's your favorite. But for me, it's learning the structure of the market. How do we seek liquidity? Why does it go up there? That's like my question. And ICT broke it down. So that's the reason why I love listening to his video and all that. That's the thing about it. I love to learn. I'm always up for something to learn, but right now I'm just focusing on his concept. And yeah, that's pretty much my whole strategy. What about you, man? What's your strategy? Like, how do you like it? How do you like trading so far? it's it's a it's a ride, huh? Have you been profitable? Mm-hmm. That's why you just paper trade, man. You'll get it back. You'll gain it back. Yeah, so it takes time to be a trader, man. It's not a joke. Everybody is always learning and they're trying to always adapt and also trying to control your emotion. In order for you to become profitable, you have to stay disciplined. You got to know how much you're willing to risk for that day. What's your positioning? So that if you took that loss, at least you're satisfied and it's not going to ruin your day. So for me, if I took that loss, I'm going to be satisfied. That's why the only thing I can recommend to you is starting from over again, starting to listen to other traders. Also learning the structure of the market, learning what ICT is talking about, because it's a long process. His video takes so long. Like for this one right here, it takes like 2 hours. So after learning, watching this video itself, this is what I learned so far. As you guys can see right here, this is what what happens on the different on 8:30 a.m. to 9:30 a.m. There is a what you call an algorithm that seek for liquidity around that time frame. That's why he talks about all the time. And what have we done during that time frame at 8:30? From midnight. We started dumping. So what needs to happen after we start dumping? Well, we need to get back up to get those liquidity again, and it started to go back up to the liquidity. So there is a certain time frame from New York session, which is 8:30 to 9:30. And then once the market opens at 9:30, that's why you see a lot of volatility. And then after 9:30 to like around 9:30 to 10 to 11, that's when you start to see where is it going to go now. All right, it goes up or it goes down. And then by lunchtime, this manipulation happens. So a lot of going up and down where it wants to decide whether we want to go up or down. Like from Friday, there was a lot of manipulation around that 11 to 1300. It did not know where it wants to go. It was trapping a lot of long position. And next thing you know, after hours, started to drop 100 points, 120 points. So that's one way you can figure it out, what's like the certain time frame and what time you should be trading. That could be profitable for you. I think that's what I recommend as someone who's been doing it for a while and still studying. There's no mentors, I don't recommend getting mentors, man. All you have to do is just go to ICT Mentorship. It's free. It's free 99, like what I'm doing right now. I'm sharing with you guys, and it's all up to you and how much you want to put your time into it. Do you want to keep losing? What's one way you can actually improve yourself? Try to get someone to mentor you. I'm not a mentor. I don't charge anything. I don't want to charge anything. This is all free and YouTube University. And it's all up to you to dig in and archive, to the archive of YouTube University and take advantage of it. This is one way we can share our information. And then also groom a community where they'll look up for you, not because of how much you're you're making, all that stuff. Join that. You know, I have a community that I'm currently building. My one of my moderator, he's a full-time trader from Canada named RC. He put out the my Discord community. It's all free, man. You don't need to spend money on some mentor. It is all up to you to start digging some information. You know, this is what is, researching is all about, right? If you want to be a scientist and you're trying to find a cure or something that's left behind, invent something, they do so much, trials and errors. And I did that. I had trials and error. Oh, just go to my Discord. This is my Discord, bro. It's free. And then I live stream every morning. And then most of the guys, they we try to help out the community. If you got, your parents or, someone passed away in your family members, we'll donate. I'll try to donate if I have the extra money. But that's what the community is all about, Sometimes someone that is in need, we can give it. It's not all about the money, guys. It's not all about the money. Because we can take it from the market. It's all about studying and taking our time. You waiting it all out. Yeah, you've been trading for 5 months. You only lost $1,000. But imagine the people that has been trading for 3 years still not profitable. It's an easy process for you to just take your time. Join ICT Concept. But appreciate you joining, man. Make sure you subscribe. But it's I'm just trying to grow the community, man. Every morning I'm live streaming, so stay tuned for that one, and then I'll let you know what my process is. Oh, I'm from California, bro. But I was born and raised in the Philippines. I got here 2000. And yes, it was legal. It's not illegal. I gotta go listen to this music. Give me a second. The largest. This is the largest. Because I'm trying to finish up this one video. Just trying to get what music my client wants. I know, bro. There's a reason why you're here, bro. Well, you looked at my account because I also got like 2 Filipinos that trades also. One in New Mexico and one Canada. They're Filipinos, man. Really, really cool people. A lot to learn. Yeah, it's all a lot of learning, bro. A lot of learning when it comes to this. X Jersey. But yeah, I'm gonna finish up this, and then probably I'm gonna be done. I'm gonna be done after this. Just gonna write it all down. Try to do my analysis.
Text and your I'm sorry, overall narrative that the market was going to go here. When
For
I
me
first got on
now,
the live
dude,
session,
trading for me is
what's the
just
first line I dropped on the chart?
storytelling. Because I'm a videographer and a photographer.
This one.
I love to film people. I
It
love
was
to
based on
film their
2.5
process.
here.
You know, like how
That's
they
all it
become a
was.
chef, how they
Why
become
did
a
I
business
pick
owner.
this high? Yes, he got my question. Finally, I've been sitting here the whole time you're talking. Why'd you pick that
But
high?
I'll be honest with you, I love the stock market. You know, I don't know why. It just fascinates me.
What's the first thing I told you? The algorithm is going to go based on time. I don't care what Mickey Mouse pattern, what Mickey Mouse logic, some romper room theory that just got pulled out of somebody's backside because they want to sell some attention for clicks and views and mentorships. Unless it stems on the basis of time first, it has to be the right time. If it's not the right time of day, it is absolutely not going to work. Period. End of story. Put anybody as the mentor, anybody as the trader. I don't give a fuck. Bad, Michael. Should have never said that. I tried real hard. I almost got through it. Put anybody you want in that list. Whatever they trade, however they trade, it does not work. It will fail. Stick with it long enough, you'll see it will fail more times than it'll work. But why and how is it that every single time I'm sitting down with you, whether it be on a Twitter space where I was calling out the candlesticks individually before they happened, or on a live stream where I'm giving you the logic, explaining to you why it should do it, okay? And then it just simply does it. How's that possible? No ego. Seriously, let's put it aside. I'm not trying to beat my chest here. I really want you, especially if you're a first-time viewer here, or maybe you come back, this is your second time watching a live stream because you expected me to do something silly today. How is it that the market does exactly what I'm saying it's going to do? You ever think about that? How is it possible that this one single person can get it right so often in front of thousands of people when many of them are hoping and praying, please God, let him get it right. I got to go on Twitter and brag about how you messed up today. I got to make a video exposing ICT. I need grocery bill money. Oh. You're so fun to manipulate, all you haters. But 7 o'clock is a very key time. That starts what? The morning session. It matters not that we're trading Forex or futures. The morning session, AM session, starts at 7 o'clock in the morning, New York local time. Okay? So you can have a model that says, I can't be in front of the charts between 8 o'clock and 8:30, and maybe you can't even trade the 9:30 opening bell for indices because you have to get ready for work. Okay, but it just so happens that the time elements in your personal life and geographically location in the world, that it allows you and affords you to look at the market between 7 o'clock and say 7:45. Worst case scenario, 7:30. If you're going to work with smaller time frames, you absolutely can use 7 o'clock to 7:30 as a model to do this very exercise.
Yes, I do. Trade full time.
So your key time
Targento. Sorry, I didn't get to
7
talk
o'clock in
to
the
you.
morning
Sorry about that.
to 7:30.
Yeah. Yeah, I trade full
In that
time,
30-minute window, you're going
but
to
I only
look
trade
for
till
relative
10:30
equal
to
highs
11,
and relative equal
and then
lows
I do
that have
my
happened
what I
prior
do.
to
You
7
know, I
o'clock.
go to the gym,
Okay?
then
And you're
do
going to be
all my
looking
tasks
through
that I
the
need to
time
do.
frames
Go
of
to
the 1
school,
minute chart, the 5-minute chart, and
and
the
then that's
15-minute
it.
time. Now,
That's my normal thing. That's my my routine.
anything else beyond that until I change the depth of
Then
what you're
spend time
focused
with the
to do.
family.
Right now, you're just having 3
No,
charts
go
up.
over there.
Since the 15-minute time frame is pretty
That's
static,
my
you only need to refer to it once in the
my
morning.
nephew
Then your second chart could be the 5-minute chart. We'll go back
trying to get in. I'm streaming. I don't want
But-
to. I don't want to show his face.
Then what you're doing is you're watching.
I don't want him to
between
be in
7
the
o'clock
social
and
media
7:30,
spaces
or
yet.
8
you know?
o'clock to 8:30, or 9 to 9:30 opening bell. You're looking for, where is the market smooth? Smooth. Because still waters invite rocks. Think about that. Remember being a kid walking and you see a pond that's real smooth. Wow, look at that. It looks like a mirror. You can see the sky's reflection off of it. So smooth. What's the first thing that jumped in your head? I need a rock. For what? Because you can't accept that. Our sinful nature says we have to disrupt that. So you pick up a rock and you want to throw it out there. Why? What's it going to do? It's going to cause ripples. That's exactly why a weak character individual in a relationship will have a beautiful relationship, a wonderful relationship, something smooth. Ain't no drama, no reason for ruckus. And what they got to do? They go out there and they chase some thought. They go to the bar, they pick up some floozy or some silver-tongued fox. It says all the right things for her. And you invite that disruption. Well, that's what the market does, folks. It's a dysfunctional family environment. And you have to be the one that says, not today, Satan. Not today. Not today. I know your tricks. I know your snares. I know how you're going to do it. Okay? So, what's the market going to do? Every single session in the morning, you have 3 opportunities. And you don't have to trade in the afternoon. You don't have to trade the London session. You have 3 opportunities in the morning to set the stage for a run that will build, if you don't have any understanding about bias, okay, if you don't know what direction the market's going to move in. When I go into other people's live streams and I say, note this, note that, here's the secret. I just gave to you what I do every single time I go into Tanja Trades. When Patrick Whelan had balls and let me into his live streams and chat. He won't do that now because he's going to be paying me $500,000 this year. The
Damn,
whole business of
$500,000?
anyone else. I talked to Trades by Matt for like a month. I told him what I was going to do, what I was looking for in private text. And he can show, I gave him permission. He can show you what I was expecting. And he watched me do this for almost a month. And I got 2 or 3 of them wrong. But most of them were like bang, 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 bang. And guess what I was doing, folks? What I just taught you here. Tom Hugard. Not as much as I showed with Trades by Matt, but in certain instances, I showed him, this is what I'm looking for. I like this level. So it's not like I'm not afraid to share this. I put what I think is going to happen.
I'm going to go get some water.
Of other.
Oh, man.
People.
I actually enjoy drinking water now. I love drinking water. I don't know
I'm
why.
inviting them to
Tastes
prove
so
the world
good
that
now.
I didn't do that.
Oops. Why did I start it? I can't even
I
hear
like
it.
certain people in this industry. And the ones I like, I converse with, and I share, and I engage with. And when I go into other people's live streams and I'm helping promote them, sometimes I'll go out and I'll point to something. And I'll say, watch this level. When I was on Twitter, note this level. I was doing this, and my private mentorship never learned this. I never sat down with them, never told them that. This is a secret weapon. It's a bazooka when a BB gun's necessary. When all you need is a match, this is a flamethrower. It's the thing that makes every playing field even. They cannot hide it from you. They cannot hide it from you. You're never not going to be able to see it. It's always there. And in plain terms, it's this. If you can contrast one side of the marketplace against another, let me do this. In this little area down here, okay, in this small little open section, I'm going to say this and I'm going to close it because I have somewhere to be with my wife in about 20 minutes. I hope you haven't, if you take this moment for right now. If you learned something today, and if you didn't learn something, you're a friggin' liar, okay? But if you honestly was with me this entire session, and you watched me outline this, and I told you why it was gonna go here, what levels were key, what to focus on, and you watched it pan out, and you understood, and you understand now, and if you don't, I'm gonna make it clear for you, give that a thumbs up, because I take that as, I appreciate you spending time with us, ICT. I don't need to be doing this. I can do this privately with Caleb. I can tell Caleb, I understand that you want to make a YouTube channel. I understand that that could make you a little bit of scratch and money. I understand that. But no, I don't want these people to know this. I could do that. And I don't feel bad telling you that openly. Because I've done a lot of that stuff that I don't want to share certain things. Because it's too good. Because 20-year-old kids go out there and pretend they didn't learn it from me and they found it on their own and they relabel it so they can make a name for themselves. And then eventually people find out about them and then they expose them as, dude, you're nothing more than just an ICT ripoff. And you can spare yourself of all that stuff just by being honest and say, you know what? Thank you, ICT, for sharing this. I'm going to make it mine. And this is how I use it. I got no problem with that. I got students out there that are doing mentorships now, okay? It's their business. It's not mine. They're not hiding where they learn it from. And that's all I've asked for. It's just, hey, just remember who fed you. That's it. I'm not doing paid mentorships. I could be out here teaching this kind of stuff and more for millions of dollars a month all over again. And folks, I don't want it. I don't want it. And if it wasn't for my son tapping me saying, hey, Dad, give me another chance to do this, I want to learn it, I wouldn't be doing this. Have you been seeing any videos? No. I'm not worried about it. But since he wants to, I'm going to pour myself into it. I'm going to pour everything I have into this. And I'm not fully back to myself. I'm not doing well. Like I've been experiencing vertigo. I've had high blood pressure. I've had chest pains. I went rushed to the hospital. Like I had a lot of stuff going on. And I'm not stressed about nothing. It's just my body's going through something and I don't know what it is. And I don't not know how to trade. I know exactly how to trade. I know exactly what these markets are going to do. Any given day, even on sloppy seek and destroy days. In fact, I'm going to wait until we have one and I'm going to show you me executing in one of them. I am not fearful of any of these market profiles. I'm not fearful of my stuff falling out of style because there is no style. This is the market. This is the source code. But when you set up a framework of whatever you're going to study in the morning, if you're going to trade the morning session, your key times, you have to absolutely be in front of the charts between 7 o'clock and 7:30 in the morning, always New York local time. Okay? If you can be in front of the charts by 7 o'clock, this is what you're doing. But if you can't, you do the same thing at 8 o'clock to 8:30. The same thing at 9 to 9:30. Okay? This is your pre-market range. Write that down, because if you don't write it down, you're going to forget. You're going to call it the opening range. It's not the opening range. The opening range is the first 30 minutes after the opening bell. At the New York session, the first 30 minutes after 7 o'clock to 7:30, that is your pre-market range. 7:30 to 8 o'clock is your opening range. Oh, remember I was telling you I could trade every single hourly candle? Now your style, because there is no style. This is the market. This is the source code. But when you set up a framework of whatever you're going to study in the morning, if you're going to trade the morning session, your key times, you have to absolutely be in front of the charts between 7 o'clock and 7:30 in the morning, always New York local time. Okay? If you can be in front of the charts by 7 o'clock, this is what you're doing. But if you can't, you do the same thing at 8 o'clock to 8:30. The same thing at 9 to 9:30. Okay? This is your pre-market range. Write that down, because if you don't write it down, you're going to forget. You're going to call it the opening range. It's not the opening range. The opening range is the first 30 minutes after the opening bell. At the New York session, the first 30 minutes after 7 o'clock to 7:30, that is your pre-market range. 7:30 to 8 o'clock is your opening range. Oh, remember I was telling you I could trade every single hourly candle? Now you're starting to think. Your gears are turning, aren't they? Oh, it's fun, isn't it? And obviously the 9 to 9:30, that's your pre-market range, and then post 9:30 to 10 o'clock, that's your opening range. There is no 15-minute opening range. I don't care what anybody tells you. Okay, it's a 30-minute opening range. That's algorithmic. Okay, so what you're doing, and this little range here that's being shown here with this rectangle, what I'm saying is this is essentially that 30-minute interval, whether it be 7 o'clock to 7:30, or 8 o'clock to 8:30, or 9 to 9:30, that pre-market range. In that range, what you're doing is you're looking at this line or beginning of that shaded area would delineate the 7 o'clock or the 8 o'clock or the 9 o'clock, where it begins at that specific top of the hour. And then this would be the range that makes up that first 30 minutes. Now, it's not obviously to scale, but I'm oversimplifying for the purpose of teaching what I'm saying. Prior to that range, anything before or to the left of this, you're looking for equal highs or equal lows. Which side has it? Because that's your bias. It's going to draw to that. How do you know? If you have both, because I heard you, you're thinking it. But what happens if you have a relative equal high here and a relative equal low here? Which one are you going to go for? You wait for the first one to get disrupted, because once that happens, then you work to the other one. That's your bias. So you have to defer and wait. Now, gamblers or live streamers that just want to have people watching and doing anything and not really executing on stream, but after the trade starts moving in their favor, then they'll show, oh, I took a trade here. What good is that? What good is that? That just proves you're not confident in what you're doing, and you're going to show it after it's moved in your favor. Talk about it, explain it, and then do it. I'm going to do that. But today I gave you a clinic on how to determine bias, how it's easy for me and it's easy for you. Whichever one has the relative equal highs or relative equal lows, that's a smooth area. It will be disrupted. Anywhere where you see jagged edges like this down here, see how it went jagged and then ripped higher. What's it telling you? What's it telling you? I'm going to look for buy side liquidity, buy stops. This has been a trap. They engage traders to go short. They're trapped short on a breakout, or they're not trying to take the shorts out of the market yet, and that's why you see all this in here, a little creeping up. This is all balanced. That's why this spike stopped right at the top of the breaker here. Isn't that interesting? Isn't that interesting? I've been talking non-stop. No chance for me to have another ad over, voiceover. It's all live. You watched me do it live. I explained the logic. And now here's the wonderful thing. You have the privilege to go back to your charts and backtest this. And your jaw is going to drop. You're going to be thinking, it's always been there. But I've been looking for this stupid ass harmonic pattern. I've been waiting for my yin and yang to appear on my chart. I've been waiting for my moving averages crossing over. But my Lux Algo indicator said this and then said that. And I got tripped up. I thought it was going to do, no, bullshit. Bullshit. It's all bullshit. There's nothing complicated about what I said in any of the mentorship videos. They're just very deep, dry lessons that give you the why. Because I'm a person that's highly technical. I want to know why it's going to do it. Don't tell me something and then do it 10 times and be right 10 times, and that's not going to convince me of anything. I need to know why it's doing it. And if you don't think critically about that, you're a gambler. You absolutely are a gambler. I need to understand Before I put money behind it, I need to know, why is this market going to do this? Then, at that time, why should it behave that way? And folks, you can't get any plainer or simpler than just simply saying, okay, where it's smooth. Now, you're going to say, well, this isn't new, ICT. You talked about relative equal highs and lows before. Right. And I taught that you should be aiming for them. But you haven't been trading like that. You've been doing other stuff. And then cussing me behind my back saying, this stuff doesn't work. This guy's a fraud. We don't see his name on the leaderboard. He's a fraud. I'm out here in front of you live telling you what's going to happen. You think I can't do that in the Robins Cup? You think I can't do that? Come on. You guys are gullible, man. You're so easy. You're so easy. I love it. I absolutely love it. But anyway, the market trades down to the bullish breaker that I absolutely identify before it hits it, and then goes to the relative equal highs I told you to focus on, and then I gave you this one here, and I told you this imbalance is prior to these relative equal highs being taken, but this was where we were focused on, and look where we're trading at. See that? Now, in closing, because I really do have to close now, in this price run, and we're not going to use all of this. This is capitulation now. It's getting real excited. If we have this segment of price action, okay, if I'm identifying this area up here, okay, more specifically, let's be honest, because this is the one I drew your attention to first, so we'll stick with that one, even though that other one was later mentioned, even before it got traded to. That high rate there. Did you get the video thumbs up? By the way, did you take a second of your time to press that up thumb icon on YouTube? That's free. I didn't charge you anything for it. Because that really is a way to communicate to me that you had fun today, that you really did leave and learn something, and now you have something that's tangible that you can go back and look at every single day in the past and journal it, because you should be doing that. Every single day, you break down the chart starting at 7 o'clock in the morning, have 7 o'clock in the morning, all the way till, say, 11 o'clock. Okay, so it's 4 hours. And you want to have your 15-minute time frame, your 5-minute time frame, and your 1-minute time frame charts, and annotate. And it may require you to have multiple charts from that individual 1-minute chart where you're zoomed in and you're annotating something specific that are very salient to you. Because most of you may not have trusted this as a bullish breaker. When you saw this drop in here, you're hoping, and some of you were probably tickled, your asshole was puckering, thinking, he's getting screwed in front of all of us. I love it. I love it. I love it. Oh, you're drooling. And then what happens? It rips your face off. And then I'm right again. I know. I know. I could have a whole lot of fun with that, but I'm not, because I'm here to try to teach my son, and you're here to learn. If you go back through all of this price run here, okay, what you're going to do is you're going to focus on the points that make the most obvious sense to you, that you could see, and it says, you know what, I understand this. Even though ICT pointed out this breaker, you may have noticed it, maybe you didn't. If you didn't, that's not your PD array. If you noticed that it traded down into this fair value gap right there, inside of this old civvy, which is essentially where? About midpoint between where we expect price to trade to, which is above these highs, and where it traded from. See that? So if we see where it's likely to go and where it went from, where it originated from, where's the midpoint? Well, let's do a simple measurement. Here's your fib. And we're going to say something above these relative equal highs. We'll just randomly pick an area right there. Okay, I'm just being very bland. There's no real reason I'm picking that price. It's just simply slightly above the relative equal highs. There's no other logic, simply that. Okay, so I'm not trying to complicate anything. But if you take that and you go down to the lows that are relatively equal, not the lowest low, that's the manipulation. You want to use the relative equal lows like that. Okay, you see that? And then you have essentially the midpoint here. In close proximity to that, you have this fair value gap, and you have this fair value gap. And this one here can be used, even though it's a little bit above equilibrium, because we didn't take this high and that high out, which I was outlining to you real time. We didn't take that out yet. We didn't take out these two relative equal highs when it was trading down to the breaker. But what happens when it trades up here, and then at real time I said, watch this fair value gap, Watch the stream. Go back and watch the stream. When we were trading right there, I said, watch, and here we are, we're trading this fair value gap here, and then takes off and runs to where we were at, waiting to see it deliver. The smooth areas are going to be attacked. The sharks are going to go to the still water. That's where they're going to go. Why? Because as soon as someone in there starts shaking in fear that their stop's going to be taken, that still water will ripple, and that triggers a frenzy, and the sharks are going to go right there. You don't trade into levels where the sharks have already had a frenzy, and that's down here. Okay, they've already done the work. There's been an attack down here. How do you know? There's been the great disturbance in what price was doing and how it's delivered. It's jagged like shark teeth cutting through the side of a whale's body. It's been damaged delivered. You can see it. It's physically represented in the jaggedness of the swings going down, where we don't see that jaggedness up here. It's nice and smooth, real inviting. It's safe. Put your stop loss above me, like a siren calling out to the sailors. Come to me, and he crashes them on the rocks. I know, Mr. Analogy. I don't know where it comes from. It's a gift. But you have to go through all of this price action in here and determine what price level makes sense to you. Which one resonates with you? Do you see the fair value gaps where I was outlining before I did it? Did it make sense when I was drawing them out? Did you change your expectation and get fearful that I'm wrong and it's not going to go up there because it had this drop here? What's occurring here? The only thing it's doing is at 9:30 during the opening range, it's doing what? It's creating a Judas swing. Something that's opposite to the real move. The real move was given to you with these highs. It's going to go there. At any time, did you hear me sound nervous in front of all of you? I don't know how many people were watching. I think it was like 6,000 earlier, the first time I checked the stream's continuity. But I haven't seen, I don't know what the highest high was in terms of how many people were watching. Did I sound like I was nervous? Because I don't think I was nervous at all today. And I've been really, really trying not to say any embellishments on the curse words and stuff. But sometimes it's just, it has to find its way out. I'm human, I'm a sinner, and I have to repent all the time when I do it. I always regret when it slips out, but I'm real. Like, I'm a real person, and I have character flaws like anybody else. But I try very, very hard today not to use that type of language. But depending upon what subject matter I refer to, it'll draw it out of me, and I'm not proud of it. But anyway, we can see how that SIBI becomes an inversion fair value gap here, and then it sends price higher, retraces down, and then you have your second leg redistribution, and then send it to the smooth area that makes up this market maker buy model. I knew it, ICT. Yeah, that's how it is. So when you're looking for the bias, okay, the easiest, most scientifically proven, 9 out of 10 doctors approve, ICT has nailed it down to a science of wherever the smooth equal highs are, or smooth relative equal lows are, at the beginning of 7 o'clock to 7:30, or 8 o'clock to 8:30, or 9 to 9:30. You have 3 opportunities, 3 chances, okay? As each one of these time windows passes by, so at 7 o'clock, we formed the relative equal highs. And then at 8 to 8:30, we didn't go up there yet. So that means that, 9 to 9:30, chances are that's the run. See how that does that? It increases the likelihood of it going there. It doesn't diminish it, because it's building up more trust in that area right there. So the framework begins at 7 o'clock in the morning. Start looking for relative equal highs to form. Not before. Key takeaway is not before 7 o'clock. At 7 o'clock, look for them to form. Big takeaway there. Okay? If you're looking for relative equal highs prior to 7 o'clock in the morning, you may get it, but many times you're expecting the London session to be completely overrid, and it's most times not the case. So it kind of like builds in this filter where you're not trying to demand that the run on London is removed or dismissed because of price overlapping it and going back over top of it. Because the general consensus is we could see the higher low of the day form in London. So if it's bearish or bullish relative to a higher time frame draw, which is not necessary. Notice I haven't even used that here yet. Only thing I used was a 15-minute time frame, a 5-minute time frame, and a 1-minute time frame. And I was framing it on the basis of time because I understand my algorithm. I understand what it's going to do. I understand exactly what these markets are going to do. Every single day, it will not stop. It will not be hidden from you, but it can be disrupted by manual intervention. And that will always cause me to lose. It will always cause me to be incorrect because that's something that we and no one can predict. It's their casino. If they want to come in and disrupt everything, it is what it is. And that's the inherent risk that every one of us has to assume while trading. So that should be the number one reason why you should never over leverage, because that is always looming. And we're in a condition in the marketplace right now in geopolitical tension and turmoil that is expected to unfold at any given time. Any moment, folks, things could pop off. And your little indicator or your little market structure idea, whether it be mine or somebody else's stuff, means nothing when that happens. It literally is cannon fodder. It's gone. You're dusted. And if you happen to be over leveraged when it happens, you're going to eat it. And sorry, but it's not going to be pleasurable. It's going to be a hard swallow and probably end you and take you out of the game entirely. And all of that is avoidable if you don't over leverage. If you trade with one contract and you try to capture moves like this, I promise you're going to beat the socks off of every one of the live streamers out there, and my students included. All of them that are doing well now, they're going to start applying this, and you watch and see how well they start increasing. And the people that don't like me, their trades are going to start working. And go back and look at what I'm taught you here. You're going to see that they're using this too. It's a secret weapon. I didn't want to give it to anybody. I did not want to give it away to anyone. It's a home field advantage, one of many that I have, but because I want my son to know what he's doing, that's real simple. It's not complicated. It's one or the other. And if there's two extremes, above and below the range, that's relative equal high and relative equal low, then you just wait for one of them to be disrupted. And just sometimes you'll miss a move. Sometimes it'll do it and then you won't get a trade. Who cares? When you back test this, you're gonna see, like, what am I worried about, man? Like, this is so many times offered to me every single week. Right. That's the mindset you need to come away with. Not, I gotta trade every single day. When it's so obvious, that's the ones you want to trade on. Because retail is going to have every hope and prayer hanging on those relative equal highs, thinking it's resistance. And they're going to eat them. They're going to devour them and grind their bones to powder. And you can have a moral dilemma and have some convictions about that being, well, I can't do that to somebody else. I can. Because they sign the same risk disclosure that I do when I open up an account. And if they make the wrong move, don't interrupt them. That's how you eat. That's how you eat here. And if you have a problem with that, then trading's not for you. And there's nothing wrong with that either. But hopefully you see that when we're doing this, we're not trying to be smart. We're not trying to be more popular than somebody else. We're not trying to get more attention and more viewership or more followers. We're in here to try to make money so that way you can make your ends meet. That's it. And some of you will supercharge that and become pillars in the community and titans and be so much bigger than I am. And I'm here to see it. I want to see it. I want to cheer you on. I'd love it for one of my sons to be that person. I've been trying to cultivate that since they were little. But they're individual personalities. And you know how it is. You don't want to listen to your parents. And even if your dad can do it and prove it over and over and over and over and over again, sometimes still isn't enough as a motivation to do it, because you have to want to do it. And guess what makes that happen? When you make them work menial jobs and they hate it. And what's the alternative? College? That's out of the question. So do what works. Do what works and can be proven. I could do this in front of the Supreme Court, right? Just like I did today. I ain't afraid of it. I'm not afraid of this. And when you get that confidence, it's not arrogance, but when somebody doesn't know how to do something and they fail miserably, when they hear somebody talk like that, and when they see somebody display it, it's so uncomfortable. It's unbearable for them. So now you are a narcissistic jerk, you're arrogant, you're conceited. Okay. Is that going to make me lose money on the next trade? No. Is that going to make me forget that the logic that is being employed here? No. I'm not here for friends. I'm not here for friends. Neither should you be. I'm warming up to these candlesticks when it's appropriate. But when the date is over, I'm going home alone. They're not spending the night with me. That's all it is. It's a momentary engagement, and I'm leaving before any kids are made. Simple as that. I'm staying protected. I'm wrapping up. I got a stop loss. I know when to hit the brakes and go out the other direction. If it's a grenade, I'm getting out of there before it does any damage. And that's me thinking like a man. For the ladies, you come up with your own analogy. I'm not that good with it with the lady side. But hopefully you've learned something today. I'm going to close this one. I'm going to invite you all tomorrow to come back if you found this insightful. It'll be a little bit more technical tomorrow. Today was more or less the mindset, how to relax when you're watching the charts, and what to look for. So that way you're not holding so much expectation over yourself, and then you can enjoy studying it, because it's important that you do enjoy it. Because if it's daunting and you're not really seeing any kind of fun characteristics in it, it's going to be very hard to stick with it. So I tried to cultivate that today. And if I was successful, you can obviously show me by giving a thumbs up. I promise you I don't make any more money by thumbs up. And you don't take any money from me when you put the thumbs down either. It doesn't change anything. But it's just a way for you to give me feedback that you found something in this today that made sense for you, that you are inspired to go into your charts, and you had fun while you were learning it. So this is going to be the end of lecture number 1, dealing with the foundations of determining a bias. It's very, very simple. It doesn't require a whole lot of complicated things. It's very time specific. Without the time elements, none of it matters. And it's very, very rule based. That doesn't require a whole lot of moving parts. Where it's smooth, it's going. Where it's jagged, it's going to move away from. Very, very simple logic, folks. Not complicated at all. Until I'll talk to you tomorrow, Lord willing, be safe. Well, good morning. This is an audio check. Now, before we get into this, my comment section and my text messages on my cell phone and email box and every form of communication that anyone could get to me, everyone was trying to let me know that the volume was too low yesterday. And I'm doing the same thing I did yesterday. Okay. I noticed that some of the individuals that left comments saying that the audio was too low, or that I was using a cheap microphone or whatever. I actually have good equipment. To sometimes YouTube just doesn't want to communicate the way a streamer would like them to do. And I'm not doing anything different today. I went through the process of checking everything. I have the microphone literally almost clipping. There's a little gauge that shows how high the audio goes up as I speak, and I'm at the last little line before it goes into the orange, and then it's in red, and then it starts clipping. Then it's really bad audio. So the compression and all of the things that YouTube does on its servers sometimes corrects any issues through the capture of live streaming. I've actually had this happen in some of the not live session, but lectures and videos I've made in the past, where the audio, even on my side when I would listen to it, would sound different than my original capture that's on my system. So I'm not doing anything to try to make it harder for you to listen to me. I'm not using substandard equipment. I have a pretty good amount of money in stuff I'm using, and I don't know what else to do. So my volume's exactly what it's supposed to be. My microphone is working properly, and I don't know what else to tell you. Okay. So if you're sending me text messages, by the way, I don't ever really get to see them until later on. And generally, I block your phone number because you took it upon yourself to step into my private area of my life. And I know my phone number and my address and all those things are on the internet. I'm not inviting you to send me text messages. So you can send me something one time, but I'll never see it again because you've crossed that line. It's kind of like the people that come to my door and knock on the door. I'd like to meet you and talk to you, ICT. Please don't do that. I'm not going to go out there and talk to you. I'm not going to shake your hand. I'm not going to do a selfie with you. I'm not that important. So anyway, today it's going to be a little bit more technical, but I promise it won't be too much, and it won't be a long session. Okay. I have an eye appointment tomorrow, just so you guys know, for scheduling purposes. We will be doing an afternoon lecture. So we'll be doing a PM session and some rule-based ideas for you to look at the market during that time, Caleb. And so I won't be here tomorrow morning session, but we'll start the stream at 1:30 p.m. Eastern time tomorrow. So Wednesday's session will be an afternoon session. And then Thursday we'll be back to a morning session. And Friday will be a morning session as well. Okay. So one of the things I want you to understand, Caleb, is when you're doing your journaling and your logging, which is what you're going to be primarily doing for the full month of August. Okay. You're not trying to push any buttons. You're not trying to demo trade. You're not trying to do anything specific about entering the market, but you're just collecting data, collecting information, and you're being organized. So that way it's training and activating your reticular activating system. Okay, that means when you see a car that you just bought, it seems like everybody else bought the same car. It's only because it's now meaningful to you. So the things I introduced yesterday, I kind of want to give you the rule-based idea on what it is, very specific, and I have to clarify a few things because it was live streamed yesterday, and I said a couple things incorrectly after listening to the playback. And a couple of you actually reached out to me in email and questioned me about what I meant about certain areas of my dialogue. And I realized I didn't say something correctly. And for instance, it was me referring to the second stage of reaccumulation. I miscalled it second stage redistribution. Oh, that's for a market maker sell model. But because I'm out here without a script, I'm not following cue cards, I'm not reading a teleprompter. I'm just going on my own steam and just what I see at the time. So I'm going to invariably make a mistake of miscalling something. It's not intentional. It's not to confuse you or anything. Um, but I'm human. So I'm not AI like some of you actually think I am. I have frailties and faults just like any one of you. So if I'm out here in front of the world doing it live, I'm going to make a mistake, say something incorrectly. I'm going to, you know, have no way of editing that out and make it more palatable for a first time viewer to listen to it and not have any distractions by something I did as a human being. And that's why I prefer to always to do pre-recorded lectures, because my obsessive compulsiveness wouldn't let me do the live streaming. But I've spent a lot of time in the last year or so just getting over a lot of that stuff. And I'm in my 50s, so I'm trying to take things a little bit easier. I make things too personal when it don't need to be. So anyway, I introduced some things yesterday visually. I talked about what the market was going to do, why it should behave a specific way, and how you should be comfortable sitting in front of the charts and observing and getting used to doing that initially, and not trying to force yourself into trying to pick a direction so you can impress dad, not try to tell me what you think is going to happen beforehand so that way you can tell dad, hey, I did that right. Remove the right and wrong right now. Just get that out of your head.
All right, so I just want to talk to you guys about what could happen on this this chart. As you guys can see, is showing us that pretty much right here, if you're looking at it and stuff, it's it looks like it's gonna go to the sell side liquidity, which is on the bottom. So it's probably gonna be reaching for the sell side or the imbalances, because it's already created at 7 a.m. It started to just like being messy now. So what I'm seeing now is it's gonna go up to the sell side and taking out all this. I don't think it's gonna try to go up now.
You've already sent me text messages telling me what you think is going to happen. Okay. Now, for the purposes for everyone here to know what he sent me, I'm not going to be able to show you the screen, but I'm going to read. I didn't actually read it word by word, but I want you to see what Caleb's expectations are for today. And this is without any prodding or coaxing on my part. At 7:33 a.m., he sends me a chart that I really don't understand what he's showing me. So that's the point of today's lesson. I want your charts to be organized. I want it to be very specific in capturing what I want to see, so that way we can measure your progress going forward. And that way your charts will look uniform every day. And then at the end of the week, we'll sit down with a weekly recap, and that'll be your first video. Everybody's asking for your YouTube channel right now. There's nothing on it yet. Okay, so hopefully this weekend we'll have something where we sit down together, maybe over a Zoom call, and we'll review what you've done and how to go into next week as well. So it's kind of like over-the-shoulder approach to ICT, grooming and teaching his son, mentoring him, and that way you get to be a part of that experience. So, but he says at 7:34, he says he wants to see it take the swing low, then go long, take out the relative equal highs, and then reminds me, don't forget to do an audio check. Listen, the audio is going to be what the audio is going to be, okay? So don't send me any messages. And for the assets to send it really rudely in the comment section, I never will see a comment from you ever again. So I make you invisible to the channel. So you think you're leaving messages and posts on my channel, but I'm never seeing that again. So if you're rude, I got no time for you. So anyway, Caleb thinks that there's going to be a rally higher today. And that's not to say that that's right or wrong, because I purposely have kept myself away from looking at the charts. So I'm sitting down with you right now, with the exception of just loading trading view and opening up the quadrants that are on the screen now, the 4 charts. There's should be a chart in the upper left-hand corner. Right up here.
Yeah,
spotty.
if you look at it right now, it actually went for the imbalances. So this is what happened right here. He said that his son said that it was gonna go up, but it went down. Like I said, it because it looked like it was weak. It needed to go do some retracement, which is like 100 points, right? So if you took that short right here from 190 and you covered here, that's 100 points right there. So that's a $2,000 win. Yeah, that's a $2,000 win right there, which is really really cool. If you have one contract, imagine if you have 15 contracts. That's already 15 times two. That's $30,000.
You're not trying to be dad. You're not trying to be. That's not proper learning. That's not. They can arrest you if you don't have the thing that should have been introduced as a remedy for Mr. 19. Wow, that's and then forcibly give it to you. Send me an email if you have any information on that and title it New Zealand, and that way I'll look for it because I get too many emails. I can't read everybody's email. But yeah, wherever you're from, you're all going to have the same face on a clock, and everybody has a 7 o'clock in the morning. Everyone has a 8 o'clock in the morning, and everybody has a 9 o'clock in the morning. And as long as that time is set to New York local time, every one of us are going to be on the same page every single market day. We're all going to be expecting the same thing. There's no way for me, as the educator here, to have out. I don't have a way of saying, well, this is what I really meant and it did this, and that. It either works or it doesn't, right? And yeah, that's the litmus test. It either works or it doesn't. It either holds up, it stands the test of time, or it doesn't. How can you prove that to yourself, to trust it? That's the important factor, and this is the part that most traders, when they're developing themselves, they rush through this. And this is such an essential part that I can't stress it enough. And I've done it a lot in lectures and teachings and all of my mentor videos, is focused on slowing you down in the initial stages because you're too quick to run out there and try to make money. And you don't know what you're supposed to know. You don't even know what it is that you should know and what you should avoid doing. And I'm going to cover a little bit of that today. Also, how to organize your charts. And then I'm going to show you what you need to be doing as homework for the rest of the day because we're only going to be here till around 9 o'clock. Hopefully. That's my plan, at least, right? So that way you can go in and start looking for very specific things that your eye will jump to initially. Doesn't mean that that's going to be your model. Doesn't mean that's going to be your entry technique that you live by and make all your money from. It just means that's your first one. And it's an invitation for your personal interest, what you gravitate to initially, wherever you are in your development as a trader and what you've been accustomed to seeing from my content. I have to allow that part. You have to give yourself permission to have that part as well. Because if I force you into, we're only going to use breakers, we're only going to use order blocks, we're only going to use fair value gaps, it's going to alienate a large segment of you and you will be left behind in your development. And that's not proper learning. That's not a hallmark or a signature of a good teacher. So I have to make allowance for you to bring your own personality to this. And you're going to see the benefits of that because for some of you, you've been trying to lock yourself into one trick pony ICT concepts because either I've done a video or I've done a trade or I've recorded something or I said something that really resonated with you and you think because it sounded cool, you want to be tactical in your trading instead of technically linked to your personality. It is going to be easier for you to see how you've held yourself back by trying to force yourself into a mode that nobody asked you to do. The proper learning is for you to come into this and say, okay, there's lots of things in this candy store I can have. Which one do I want to work with first? It doesn't mean it has to be my favorite, but I have to start somewhere. So I leave that up to you. And it'll make much more sense when we get into the charts and the technical aspects. But initially, I want to give you the protocol that you go through every single day when you sit down in front of the charts, whether you're doing it live or if it's after the fact and you come home from university, come home from school, if you wake up and now you're going to have time to do it, you haven't made the changes in your life to allow yourself to actually be in front of the charts there live, or you're working. Let's just be real. Okay, you may not be able to do what we're doing right here live, and maybe you can't see me doing live streams when I'm doing them and having the benefit of borrowing my experience. So what do you do with that information? How do you journal? How do you log what it is that you should be observing and studying each day, and then referring back to that same information on an individual day-by-day basis on the weekend, whether it be a Saturday or a Sunday. When I used to do Twitter spaces, I would talk about how this is our day to kind of like ground ourselves. The markets are not trading unless you trade crypto and you're an idiot and you think that that's going to be real money in the future. All those things put aside, that is the day where we rest. We don't try to trade. We don't try to formulate any kind of hardline ideas. We go back and refer to what decisions we made, what actions we took, and or actions that we should have but didn't, and identify opportunities that we weren't able to see then, and then encourage ourselves through journaling, saying, these are the things I did right, and these are new opportunities for me to investigate and look into, because this was something I didn't have the pleasure or the luxury of understanding or identifying at the time. You see what I did there? I took something that every one of us is going to have happen to us. Okay, there's a opportunity for us to see what we could have done better. Now, if you're on social media or you invite other people, usually people that are an idiot, they don't know how to trade, they're toxic, they work at Jiffy Lube, they ain't got a raise, and they're probably on the verge of getting fired, you're going to listen to those individuals give you insight or opinions in your comment section, or they're going to comment to you in a live chat via someone else's live stream. If you make yourself available, okay, toxic people are going to give you their opinion unsolicited, and they're idiots. You don't want to listen to an idiot. The village idiot mentality is in every segment, in every community of trading. There's a whole bunch of them. There's a whole tribe of them, okay? And you should not care what anybody else thinks. And if someone takes the time to congratulate you or say, well done, you need to dismiss that as well, because you're not trying to fuel ego. You're not trying to allow anyone to influence you negatively either. But that same element needs to occur in your journaling, which means you have to filter out all of the toxicity that you're invariably going to reach into and say, I didn't do that right. That was stupid of me. I should have saw that so-and-so forming in the chart, or I saw it, but I ignored it because I wanted to be right. And then you feel compelled to, you think journaling is a beat up session. Like you're giving yourself an ass chilling. You're not trying to parent yourself. You're not trying to be dad. You're not trying to be mom, overbearing, correcting you and punishing you. What you're trying to be is the best coach for someone that you love. If you are trying to coach someone that you genuinely love and you don't want to break the spirit of, and you want to encourage that person, you should love yourself just as much as you love your spouse or your children. You have to have some measure of respect for yourself. And tearing yourself a new ass in a journal is not going to help you get better. You're not trying to play a drill sergeant. We mentioned this yesterday as an analogy. When you go through boot camp, they're tearing these individuals down mentally and physically and to the breaking point. And then they're shaping them up into a sword. Okay, you're going to be a Marine. You're going to be a machine. You're going to be a soldier of fortune. You're going to go out there and rip people's hearts out and eat it before they die. They're trying to turn them into an animal for war purposes. That's not what you're doing in a journal. Okay, you're not trying to mutate yourself into some crazy Wolverine. You're literally coaching yourself, and you're encouraging yourself in any opportunity where someone else could, and yourself as well, could take something out of context and say, this is a perfect opportunity for me to dump on myself and spend too much time dwelling on a negative thought or a negative reaction or an inability to respond or react to an opportunity, and frame it and encapsulate it with toxicity. You don't want to do those things in your journal. Now, for people that are idiots, they're going to say, well, you're just sugarcoating it, okay, and it's a waste of time. Journaling is a waste of time. I promise you, these people are not making money. These people do not have a trade. They're not consistent, and they're just absolutely miserable cretins. You need to keep all that junk and filth out of your mind, out of your circle of influence. And that's why social media is a cancer. This is my only mode of social media. I am not on Instagram. I'm not active on Twitter. I am not doing anything else. I'm not in a Discord. I'm not running any kind of social media where people can engage with me. Hey, how you doing? That's not how that works. My private mentorship, we have a space. Okay? We have a space where we communicate. When I want to make something available to them, I talk to them. That's it. And it's at my time. It's at my, I don't schedule anything. It's just when you see me, I appear and that's it. Outside of YouTube, this very YouTube channel, there's no other ICT experience. And when I mentioned that I was never going to do a paid mentorship, I had people leaving comments yesterday saying, you said you was never going to do a mentorship. Right, for money. I'm not asking for payments. You're not sending me any money here. You're watching because you want to watch or you don't want to watch. So you have to manage a lot of people's personalities if you allow them to have any interaction with you. So the best thing you can do, if you're really going to make an attempt to do it well, is what I told my son. I allowed him to be amongst my private mentorship students. He's among them right now. But I've also told him, don't talk to any of them. And don't think that it's rude. Don't think that you're trying to be pompous or arrogant, because these individuals are going to try to warm up to you. And I have leakers in my groups. They're there. Okay. So I told him, don't even listen to it. They're going to blow smoke up your ass. They're going to try to befriend you. They're going to say whatever they want. Or some of them might take a shot and say, hey, look, your dad's not on the leaderboard of Robin's Cup. He's a fraud. And what are you going to say about that? Well, they won't have the balls to do that because then I'll groom them out of the mentorship. But the point is this. Don't allow toxic people or anyone to fluff you up. And you need to do the same thing in your journal. It doesn't mean you can't congratulate yourself and cheerlead yourself when you do it right. Just don't lay it on thick where you think you're, the bee's knees, if you will, meaning that you're really a hot shot or better than you really are. So you have to be very, very balanced, but you're leaning heavily on coaching, encouraging. Yeah, you may have not observed a specific function in price delivery, and it just happened to be probably the biggest run of the day. And you, in your infancy and your understanding, you don't see those things forming yet because you haven't had an experience doing these very things I'm going to show you today, and then studying it and looking at old price moves. This is exactly what you need and must do. You will not be consistent. You will not be consistently profitable. You will not be comfortable waiting for setups until you've done this part.
I thought my
Now, I'm
printer
forcing
broke.
Caleb to do this for a month because I want to see that, number one, he can stick to the process of doing it over and over again. I don't want to receive texts from him saying what he thinks is going to happen. I don't care about his opinion, and it's not appropriate for him to have that understanding yet anyway. He thinks that he should. He thinks that that's going to be a measuring stick so dad can feel like, okay, my son's doing his part. No, I'm going to know you're doing your part by what I'm going to outline today. And then this weekend, when we see it together, I'll know if you've been doing it or not, because you can't make that up. It's something that you have to journal. It's something you have to go through the process of studying the charts. You can't fake that. You can't watch 10 minutes of my video like my son Cameron did and said, yeah, I was watching your videos, Dad, and so and so and so. Okay. Then I asked him something else I said in the video, and he had no idea what I was talking about. Because I know what he did. He skimmed through the video, listened for a couple buzzwords, and he fell into the same click a lot of people do on the internet. They want to talk with the language, but they have no understanding. But they'll use market replay to teach my stuff. It doesn't make any sense. You don't want to fake it. You want to be able to do it genuinely, and you want to have a genuine mentorship experience. Well, your part of this, your personal contribution in the initial stages, is what this is all about today. Okay, so yesterday I talked about the process of not going above a 15-minute time frame, and I know some of you that have a higher time frame affinity for like a daily chart, weekly chart, and whatnot. That probably feels very uncomfortable hearing that. And I've said this before. You don't need all those time frames. Now, when you have a model that you're risking money behind, it's important to refer to those things. But right now, the only thing you're trying to do is get familiar with reading price action and getting over that fear of missing moves and fear of not knowing. The fear of not knowing what's going to happen next, it's an enormous sense of well, it's like a barrier. You feel like you can't break through this invisible force field of, I wish I could know what it's going to do next. Because if I could just do that, then I could be profitable. And I'm telling you, that's not true. That's not true. But it has a necessary role in your overall development, and it needs to be the first thing. Where's the market likely to move directionally? Where's it going to gravitate to? And what time usually will these moves form? I introduced a very generic form of that yesterday. It's not complicated, and we're going to go through the rules very, very specific, and it's not a lot of them. It's not a whole lot of moving parts. And I'm going to clarify what I meant yesterday prior to 7 o'clock in the morning and what you're specifically looking for. Because I got a question from one of my private mentorship students, and I went back and listened to it. I was like, oh, yeah, I can see how that causes confusion. So I'm going to address that as well. I apologize if I confuse a little bit of some of the references to time around that 7 o'clock in the morning, because it does sound like I say, look for it before 7 a.m. And then later on, I say, you don't want to look before 7 a.m. So I'm going to clarify what I really meant there. And like I said, I'm not using a script. I don't have any kind of bullet points to go by. I know what I want to talk about, but because I was watching Price Action Live, my attention was on that as well as talking about what it is I wanted to cover. But yes, there was a casual lesson. This is a little bit more specific. So I have lots of charts available to me in hardware on screens that are off right now in front of me. I'm only physically working with a laptop computer. Most of you only have like a tablet or a singular computer screen or a laptop. Okay, and you can do everything from that. Okay, I would counsel you not to try to put your faith in using just a smartphone. Okay, if there's something you're observing and studying on the move, like you're at work and you're getting a bathroom break, or if you're on lunch break and you want to look at the market through your phone, I don't have any qualms against that. But if you're going to try to make an attempt to learn how to do this well and consistently, you need to have something larger than your smartphone. Okay. And I don't mean the one phone like my son Cody has. He opens it up and unfolds and it's a bigger screen. That's still not enough. Okay. You have to have a laptop at minimum. Okay. About 15 inches, minimum surface space. You may not have a trading view subscription that allows you to do some of the things that I'm going to refer to today. You do not need a sub 1 minute time frame, but I'm going to show you, for the people that do have that, how to integrate that into this. Okay, I mentioned it in passing yesterday, so now I'm going to give you the rules and how it looks, what it looks like rather, in the price runs from yesterday, and how to study today, because I won't be with you after the opening bell at 9:30 Eastern time. And also the reason why I want to keep this short is because I have not been doing a lot of talking, and yesterday, a little over 2 hours, I got a little hoarse yesterday, so I want to make sure I can preserve my voice. I don't want to come to you tomorrow and say I can't talk. I lost my voice. As much as some of you guys really want to hear me say I lost my voice. So I'd probably still sit out here and type over the chart, and without having to say anything, I'd still do the same thing. But people that don't know English, they'll send me hate mail saying, I can't read what you're saying. Why don't you have subtitles? Because I'm not speaking. It's all being typed out. So your chart, if you have the ability, put all 4 charts up on the screen like this. Your upper left is 15-minute time frame, lower left is 5-minute, upper right is 1 minute. And if you do have the ability to look at anything less than 1 minute, you can put a 15-second chart. Not that you need it, but you're going to find out today that it is very, very informative for seeing what price is doing underneath these 1 minute candlesticks that you never really are aware of usually, or you probably didn't even think of it, okay, prior to investigating and studying it, because there's a lot of things that you would see on any other time frame occurring on that 15-second chart. And it's very forgiving. So as if you missed a move and you missed an entry, the 15-second allows me to get into a move if I missed my ideal fair value gap, or if I have a limit order and I have the order sitting inside of a level that I feel pretty confident that it's going to trade to. Sometimes I've had it, and if you watch some of my recorded sessions before, you can see where I have had limit orders where it goes up and touches the limit order, but doesn't go above it for the spread. And I've had one instance where it did technically go above, and the spread should have afforded me the fill, but it did not fill me. Guess what that means? That's the real world. That's what's going to happen to you. When you start trading, you're going to have limit orders that don't get filled because we're using such a degree of precision. That is a welcome struggle. That's a challenge that I enjoy having. And you're going to learn to have that mindset as well. Whereas right now, if you don't have a whole degree of importance placed around precision, when you don't get your fill on a thing, it's struggling point for you to wrestle with. Why did that thing take off without me? I'm never going to get another move. This is the only move I'm ever going to capture, and I missed it. That's what you think. That's what you feel. But me and my students that have done these things for years and years now, we're comfortable with, well, I was trying to be so perfect and precise about where I wanted to get in at so I can have a very, very small stop, very, very small stop loss. It didn't fill me, and it started running away. So I didn't get my best fill. We don't get upset about that. We're not cussing at the screen. Oh, you so-and-sos, you didn't give me my fill. Okay, that is an expression, don't be a dick for a tick. If you're trying to be very, very precise about your fills and your entries, and you don't give yourself flexibility and permission to see it not fill sometimes, you're going to have a real hard time in the early stages of order placement and learning how to trade entries, because you're going to be demanding perfection, and demanding perfection is an invitation for frustration and regret and struggle, and it's going to make your learning process a whole lot harder and longer. You don't want that. So a 15-second chart, I'm going to say this and then we'll get into the business of the 15, 5, and 1. The advantages of a 15-second chart is that I can get into a price run that I missed on a 1-minute chart, a 5-minute chart, or a 15-minute chart, or any other time frame that I may be looking at. But for the rules that I'm placing on you, Caleb, these are the only time frames until I tell you otherwise. You're not looking at anything else. So don't send me a daily chart. Don't send me an hourly chart. Don't even ask me questions about any other time frame ever until I introduce some other reason for you to look at another time frame. Because this universe right here, okay, this whole solar system of price action is all you need. You don't need anything else. You literally need nothing else but this. I mean, truth be told, I said this before, I don't even need a chart. I don't need a chart to trade. But to communicate what it is I know that I'm not going to teach, I use charts to kind of bridge the gap. So it's a very effective medium. To prove that, it's your task to see what I'm saying is valid or not. So y'all have this entire month to walk forward and see what it is I'm talking about, whether it works or not. You all will be able to see if it's based on fluff or if it's really valid. I walked you through it yesterday live over a 1-minute chart. Every fluctuation, telling you what was going to happen. There's still huge opportunity for you as the person in the driver's seat of determining what it is you're going to do with this information. Because there's, as you're going to see today, there's a lot of that in your disposal. You have a lot of input that you're going to bring to this. And I'm not asking you to send me email saying, okay, I watched this and this is what I'm choosing to do. Like I'm going to sit down and say, well, that's a good decision of what you're focused on. And I think this is a great, I don't have time to do that. There's too many of you that always try to reach out to me, and I physically don't have the time to respond to everyone. And that makes a lot of you upset, like I'm ignoring you specifically. No, I'm trying to ignore all of you. I've been trying to have a normal life, okay, and not have ICT-ism all the time. But the 15-second just simply gives you more opportunities to get into a move that's underway. That's really all I'm saying. Or to dial down and reduce the risk and the exposure of a stop loss that would otherwise probably require much more handles or pips if you're referring to Forex. It can be reduced very small because you're looking at a 15-second time frame. Now, don't think for a second that the 15 seconds just answers all the equation and problems of larger stop losses, because if you don't know how to read price action, and if you don't know what that 15, 5, and 1's doing, just because you looked at a 15-second, some of you are thinking, oh, he just gave me the shortcut. There's the shortcut. All right, ICT's the plug. Like, hey, he just gave us the secret. This is the golden ticket. Don't look at anything else, folks. Everything else is distractions or red herring. 15 seconds is the answer. And when I started talking and trading off a 15-second chart, I got responses like that. Like, oh, bro, like you're the goat. Like you've tipped the hand. Like you made it's easy for us now. And then invariably, weeks later, they're like, I don't know. I'm getting chopped up on this 15-second chart. Right. Yeah, because you thought you were just going to jump to the head of the line and no adversity. And you can't do that. So, son, when you're doing this, I know right now he doesn't have, just so you know, he doesn't have a membership or plan through TradingView. Okay. So that way, here's what you maybe don't know, but my private mentorship students have been monitoring this for a little while. We're probably going to go to like 9:20. By the way, I'm looking at the time. But all of this is essential because I'm going to answer a lot of questions that you're going to keep trying to send to me, and it's going to frustrate me because I am answering them in the dialogue. But my son doesn't have live data. Okay, and you're probably saying, well, what business should he have trying to learn this stuff if he's not looking at live data? Because I am talking to him and I'm telling him up until recently, now, I would tell him by me either entering a trade live, not market replay, not hindsight stuff, I would point his attention to a specific level. Like I was outlining it yesterday for all of you watching. And thank you all for giving the thumbs up. I appreciate that. Last time I looked at it was 17,000 thumbs up. So it's like 10%, 170,000, 175,000 people watched the video or live stream, either replay or whatever. It's still a little bit lower number. So, I'm trying to figure out what you were expecting because it literally did exactly what I said I was going to do. But he watches delayed data. And for some of you that can't afford TradingView stuff, they do a Black Friday sale. And last year I bought like 6 years of TradingView membership at the level I have, which is the highest. I use the highest one. And I think it was like $600 or something like that. And I got like 6 years of like everything that I use right now, which is the highest membership. You don't need the highest membership, okay? But I'm not a representative for TradingView. I'm not trying to invite you to spend money there. This is just the medium that my community asked me if I would use when MT4 became exposed as a way for people to rig it, okay? And people accused me of using a white label broker, and I've already smashed that lie and conspiracy. It's destroyed. You watched me do it yesterday. Okay, I know what price is going to do. I don't need a gimmick. Okay, I don't have a fake brokerage firm that like Hanko Trade. Okay, oh yeah, they make this person look like he's made a lot of money, and I can go in and edit my trades, and that way you can get other people to go in and sign up with them. They can lose their money, and these types of brokers, keep the money because they debook you, and that's an opinion. That's not my opinion. I've heard other people say that. So just for the people over at Hanko Trade that want to send me some mail, just know that I'll respond to that accordingly as well. I'm using an analogy that's been said and bandied about by other people. I would never trade with Hanko Trade, by the way. But the point is, I'm using a medium that the community introduced to me. I didn't even know anything about trading yet. So don't think that this is an invitation for me to make money. There's no business arrangement with me. TradingView has asked me in the past to have some kind of partnership. I have declined that. I still have the messages that's been screenshot. I can load that up on my TradingView and show it to you. But for privacy's sake, I'm not going to disclose the person from TradingView. But I've been honest. I've never had an affiliate with anyone. So my opinion is always raw. It's honest. And sometimes it's going to be appearing disrespectful to them if it's something I don't agree with. If I say there's something that there's a problem with, I don't like it. Like, for instance, FXCM. I think they're a shit broker, and they should have been shut down entirely, not just move out of the United States. But that's my opinion, right? It's my personal experience with them, and I'm glad that the U.S. can't deal with them. And they did you a favor by leaving. Long story short, he has a task of securing on Black Friday a trading view plan or membership where he has real-time data. So he has what? He has a few months because Black Friday is in November. So he is not going to need or require live real-time data at all because I'm providing that perspective. I'm providing that. Okay. I'm coaching him along. And then because he's doing it with a delayed data, I am pointing at real-time data and a setup that I'm expecting to take a trade on, drawing to a pool of liquidity, whether it be relative equal highs or relative equal lows. And then he has the benefit of not even having any hindsight advantage because he's now, what is it, 15, 20? I don't even know what the delay is. Okay. Whatever the delay is on TradingView, like if you don't have a membership and you're looking at the futures chart, I don't know what the time limit or deferred delivery of whatever the real-time price is right now for me or anyone else that has real-time data versus what TradingView shows you. Like I don't know what that is. But Caleb doesn't have any advantage. He doesn't have any resource to tap into to see, okay, I want to impress dad, but I'm going to cheat and I'm going to look at a chart that has real-time data. I know it's going to go there in the next couple minutes. So therefore I'm going to trade this, or I'm going to say it's going to do that. See, he doesn't have any of that. So because of that, he has a unique perspective. As me, as his dad, I have the experience. I can see it real time and know what it's most likely going to do more times than it's not. And then I enter a trade. So he can see dad doing it right, dad calling it, dad executing on it, dad managing a real stop loss, managing the stop loss throughout, and then watching the targets get hit, or if it reverses and takes me out with a stop loss that prematurely exits the trade. He sees all that stuff, as it's going. I update it constantly as it's going on. But then he has the ability to see the trade forming with me, telling him what I'm doing with my account with real-time data. And it's a unique learning experience because number one, he has me telling him what I'm doing real time, but then he can stalk the chart. He can see it as it's forming, knowing that I have placed skin in the race with my execution. I have faced the save. I have money to lose. I have profits to make. I have a real management engagement with this idea. Whereas he has just the luxury of, I don't have to be right or wrong. I want to wait and see when the chart presents the things that I'm trying to learn. And when it's given to you like that, it's like the best of the best. And for anybody that has an issue with that, you're an idiot. Okay? Because he has all of the advantages and none of the disadvantages. He can't lose money. He's being primed to look at it at the right time. And it's always the same times all the time because the market is algorithmic. So it subconsciously trains him, and he's learning on the surface level what he should be feeling and how he manages expectations. Over time, and until we get to Black Friday, which is in November, he'll purchase at a discount rate because TradingView always does a very, very deep discount. And I don't recall how much it is because I don't worry about price tags, but I bought it at that time because I realized I was spending full price by buying it in January, and I didn't know they were doing Black Friday. I don't usually worry about Black Friday sales stuff. Like if I want something, I just buy it. And I don't really care to know what it costs. I don't shop around and try to get a good deal. I don't give a shit. If I want something, if it's in front of me, I'm taking it home with me. Well, TradingView, I'm telling you, if you're buying it any other day except for Black Friday, you're wasting money. So there you go. And they're probably going to be mad at me because I said that, but Caleb isn't going to be spending any money on TradingView, charting, or real-time data until that month, so the third Friday of November. And then he'll have the ability to see things real time too. But he has, at that time, he has several months of learning how to anticipate these things that he watched me do, like you did yesterday. But he's been watching me do that for a while. And my students have been watching me do that for years. It doesn't change, it doesn't morph. So let's go into the business. All right. So if you go over here and you look at my 15-minute chart, I know that's a really long monologue, but you have no idea how many questions I get and how those types of segments of my delivery removes a lot of headache because people get mad at me like I'm ignoring them and their questions, and it's not about you, bro. Okay, you're not the only person I'm talking to. And the 15-minute time frame, what you're doing is you're looking at time first. And let me first cancel out the confusion I probably caused some of you. So here's 7 o'clock in the morning today. All right. You want to put a vertical line on that. It doesn't need to be a very, very bold color or anything like that. You want to just be able to annotate 7 o'clock. Okay. The things I mentioned yesterday where I said you want to start at 7 o'clock in the morning, that's true. Caleb, you don't want to look at anything prior to 7 o'clock because you are not versed in anything with the London session. I'm not expanding your focus and time beyond the scope of 7 o'clock in the morning, New York local time. That's your punch in time. Okay, that's the earliest you can refer to in price. If we look at, now pay attention to this, okay, because this is going to answer the confusion I caused yesterday without really wanting to. At 7 o'clock in the morning, that begins your hunt for relative equal highs or relative equal lows. What I meant to say, but I wasn't very successful or articulate in the way I said it, is when I was referring to the London session, you do not, this is the part where I said this is really important, this is key takeaway information, do not look for your relative equal highs or lows prior to 7 o'clock, Caleb. What it does, you are not versed in anything with the London session. I'm not expanding your focus and time beyond the scope of 7 o'clock in the morning, New York local time. That's your punch in time. Okay, that's the earliest you can refer to in price. If we look at, now pay attention to this, okay, because this is going to answer the confusion I caused yesterday without really wanting to. At 7 o'clock in the morning, that begins your hunt for relative equal highs or relative equal lows. What I meant to say, but I wasn't very successful or articulate in the way I said it, is when I was referring to the London session, you do not, this is the part where I said this is really important, this is key takeaway information, do not look for your relative equal highs or lows prior to 7 o'clock, Caleb. That does not mean students that have learned models from me in private mentorship that they shouldn't be doing an observation on these relative equal highs. Because if you're looking at prior to anything at 7 o'clock in the morning, what you're really doing is you're referring to London sessions price data and its profile, not market profile where it has the volume, horizontally, okay, like it's something special. That's not what I'm talking about. Market profile is it making the high or low of the day in London? Is it setting up a consolidation to expansion trend day? Or is it going to be just a trending day? Is it seek and destroy? All those profiles I taught, they're on my mentorship videos on this YouTube channel for free. You don't need to pay for them. You don't need to go to somebody else's 5-minute trainers. And I promise you, they don't know how to use them either. This reference point at 7 o'clock, if you know how to trade other price action models or ideas that I taught, and you've been with me as a student for a while, and you do trade London setups as a continuation or a potential reversal for a New York session market reversal profile, where what that means is London session between 2 o'clock and 5 o'clock in the morning Eastern time. That's New York local time always. If that session time has seen the market drop like we see here, okay, if there's going to be a New York session market reversal profile, that means that they're most likely going to see price trade back above and overlap all of the movement that was started at 2 o'clock in the morning here. Well, if you're a brand new student of mine, or if you've been familiar with some of my videos but you just feel confused and you've never been able to find a footing on how to start, where to begin, this is what I'm teaching that to my son Caleb, because he's in that same boat. He has familiarity. He's had Top Step account. He's done all that stuff, but he hasn't seen consistency, and he doesn't really know what he's doing. This is what I'm going to do, and I'm only going to do this. So what I'm trying to do is I'm stripping it down to the chrome and saying, this is what you focus on. You start here. And then when he shows me by his progress that he understands what I've given at this point here today, then I will expand his circle of focus and his intentions on other factors of time. But you don't need anything. Honestly, you don't need anything extra outside of today's stuff, what I'm going to teach today. So in clarity, if you are a trader that understands day of the week and time of day and London session trading and how it can communicate a potential continuation or reversal in the New York session, you should have been fine with yesterday's commentary. But for the folks that don't understand how to trade the London session and how to integrate that with the New York session and how it works together to make the daily range, that could have caused you a great deal of confusion. And I did. I saw a lot of folks in the comment section saying, you kind of like, you made two statements that are opposed to one another. At one point, you say, look for relative equal highs and lows prior to 7 o'clock in the morning. And what I'm talking about is for anyone that wants to look at the London session and you understand daily range and you understand all the other things I've taught and you're more of an advanced trader using my concepts, you can look for setups prior to 7 o'clock in the morning. But if you're brand new, don't even worry about that right now. Trust me, you don't need anything else prior to 7 o'clock in the morning at all. So for clarity's sake and simplicity, and to remove all the complications that you probably thought was being thrown in there, at 7 o'clock in the morning, what you're doing is that's your beginning of the day. You're now starting to look for relative equal highs and lows. And you start on what time frame first? The 15-minute time frame. Okay? So this starts the hunt for, at 7 o'clock, did we create a relative equal high yet? No, we just have one singular high. Do we have relative equal lows? Don't look at this because it's before 7 o'clock in the morning. Don't do that. Don't even refer to it. The rules are very simple. You're waiting to see relative equal highs and relative equal lows form after, post 7 a.m. New York local time. Now,
Oh no, what did I do? What just
You do
happened?
your thing, and you do it well.
All right, it's an ad. I'm not going to scream at you and tell you how amazing I am or why you should book a call.
do we have relative equal lows? Don't look at this because it's before 7 o'clock in the morning. Don't do that. Don't even refer to it. The rules are very simple. You're waiting to see relative equal highs and relative equal lows form after, post 7 a.m. New York local time. Now, these two lows may be a factor for the 5-minute chart. So we're going to go to the 5-minute chart and expand that. All right, so now we do potentially have, if this starts to rally, we don't have it yet, this could potentially become relative equal lows. Now with that, all you're doing is you're making a mental note of it. You're not annotating your chart because it's not there. You never, never, never lead your expectations with something that has not actually formed in the chart. Don't predict the setup. You have to wait for the setup. You have to wait for these signatures to form in price. You cannot anticipate them. You don't know what you're doing yet. I can do those types of things. You've watched me do that with calling inversion fair value gaps before they actually formed. And people insisted that it was after the fact, annotations. It's not. So the point is that experience will be given to you by exposure and repetition. That's the only way you glean the experience. You have to do these things, and they are monotonous. They're boring. They feel like they're fruitless in the beginning. It feels like, what am I even doing this for? And that's why I'm talking to you this way, because you're going to want to not do this. You might do it tonight, today, or tomorrow, maybe the rest of this week. But something's going to happen. Next week, you're going to want to do something differently because it's not making you money. You're not pushing a demo trade, and you're going to mess up. You're not going to learn. You're not going to progress. You're not going to understand yourself and what you're expecting to see in price action because you're not doing enough of it. Just like working out, everybody can join the gym, but you're not going to stick to the process of eating well and exercising and sticking to that regimen and that routine to see the results finally come that you're going to have to wait for. Those results are a deferred result. Everybody wants to join a gym and lose 10 pounds in the first 2 days and feel like I made the right decision. But you have to submit yourself to the process that these results that you're wanting, you're going to have to wait for them, but you're still going to have to do a lot of work every single day working towards those results that will come later on. That's the problem with millennial mindset in trading. All of you millennials out there that are trying to be substantial or significant in this community, you're rushing to try to be significant with no talent, no skill or understanding, and no prowess. And if you do what I'm teaching you today, you'll get that for real and honestly. And in that skill set, no one can take it away from you. I won't be able to talk down to you. No one else will be able to talk down to you because you'll be able to carry yourself with a skill set that no one can strip away or diminish. And that's what everybody should aspire to have. But I'm promising you're not going to get it quick. 5-minute trainer videos, 5-minute mentorship guys, they're not going to get you there. Okay, this is the way you get there. It's blood, sweat, and tears. It's doing these very boring observations. So post 7 o'clock, you're scanning through, looking for relative equal highs and relative equal lows. We can't refer to that low because it's before 7 o'clock in the morning. So we go down to a 1-minute chart. I'm just going to toggle through on the chart itself. And here is the 7 o'clock delineation. And you're looking for relative equal highs. Now, these have already happened, okay? So that's something that you could have observed at the time at 7 o'clock in the morning. We weren't here, obviously, at 7 o'clock. But it ran through there. So what did this do? Okay, think about what I was talking about yesterday. There's 2 different characteristics in price delivery that is a very, very simple perception of what price has done. It took an area that's smooth and made it jagged. So what happened here? This was an engagement for liquidity. So what did it do? It took buy side. After it took that buy side, where did it go directionally? Lower. So if it's done this type of work, then you have to go back through this price leg from here down to there. See that? So what you're going to wait for is something after 7 o'clock in the morning to create relative equal lows. It could rally up, and then these relative equal lows could be the setup for a run lower. And if it goes below these relative equal lows, and I'm not saying it's there yet because I'm not trying to push that on you today, but these are the things you're doing as you're watching the chart. You're observing and referring. So if these become relative equal lows and it rallies higher than this high here, these become relative equal lows. And if it wants to go below that, how far can it go? Refer over there. That's not the same thing as looking at relative equal lows before 7 o'clock. You're just looking for liquidity for the sake of just simple liquidity. And you're referring to how far can it go beyond relative equal highs or relative equal lows. You got to look at market structure outside this parameter. But initially, all you're looking for is to get a draw or a short-term bias on a time frame, whether it be 15, 5, or in this case, 1-minute chart, where it affords you movement. You're watching to see how it attacks or tracks to a relative equal low or a relative equal high. We already see that they've done some work up here. There was a shark frenzy, okay? There's blood in the water up here. We don't want to trade up into that. We don't want to trade into this because they've already done a lot of things in here. So what we're doing is we want to see it try to make an attempt to run out some kind of a relative equal low. That's what you start with. It doesn't mean you're right. It doesn't mean it's going to pan out. It's just that's what you start with. That's the process. So you work from the 15-minute time frame, look for relative equal highs, relative equal lows after 7 o'clock in the morning. Even if you see them obviously right before 7 o'clock or during the London session, ignore them. All you're trying to do is learn how to encapsulate price action. If this price, all this price action here was over the course of, I don't know, 15-minute time frames or 30-minute time frames, and this was the close at 4 o'clock in the afternoon New York time. What that would indicate is that this was the daily range. It created the Judas swing here, it dropped down, and it came off the low to close near the low of the day. That's power 3. You're going to discover that every single time you sit down and you look at the AM session, you're essentially looking for that to form. You're looking for some fake.
All right, I'm done with the stream. I'm gonna just take a break now. See you guys later. Hope you guys enjoy that.